really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh,
We got the mobile version now, remember that?
oh that's right. It's Finder
Yeah,
Mobile.
yeah. That's some good product placement.
How did we even get a plane with our name on it like that?
I used the company card.
Frank, what? How much did that cost? Actually, you know what? We're at the beach. Don't answer that. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now. Wait a second. What is that out in the water? Is that a shark?
Yeah, thankfully he only took half off my surfboard.
The markets can be a very scary place. Don't go wading into treacherous waters without your edge finder, which gives you market data like the commitment of traders data, retail sentiment, our top setups algorithm, which generates ideas each day for you, and so on and so forth. If you don't already have a copy of the edge finder, we're currently doing our summer sale, and it is our biggest discount of the entire year, no questions asked. If you're waiting for a better discount, you won't get it. Currently, the edge finder is half off. And for stream viewers who are watching right now, we're going to be dropping a link in the chat as I speak, and that link will take you to a direct message center where you can speak to a rep on our team. That rep can get you 55% off so that you're no longer swimming out with the sharks. Get inshore and trade with the edge finder. Check it out, and thank you guys for watching. Back to the All right, welcome back, guys, to another live stream. Hope you're doing well, and man, hope you're staying afloat with all these beach going advertisements and jokes we've been running on the show. Hope you guys liked that. We put a lot of effort into theming the streams, obviously with it being, summertime, where we've got everything themed to a summer theme on the stream, which is fun. Anyways, got to play my intro music. Hold on. Intro music coming in. A little vibey today. What's not so vibey today is the markets, man. The markets are volatile today. You got gold down again today. You got the NASDAQ down. The NASDAQ took a beating yesterday. And you can actually see, hold on, let me get my my pen here. So you can actually see on the NASDAQ, man, yesterday was a absolute bloodbath. In fact, I think yesterday, I don't know if you guys saw this, but I believe it was about a $1.1 trillion loss of market cap value yesterday alone. Really crazy. A massive amount of money was lost yesterday with stocks selling off so aggressively. And we're going to talk a little bit about why that might be. We're also going to talk about what I'm looking to do in this environment and how I'm planning to play it. I've got some moving averages on the screen, and I wanted to just take a look here from a moving average perspective or a longer term trend in the simplest way we can apply those trends to our charts using moving averages, where we're at with this pullback. Because a lot of people, I've been seeing so many people, they are jumping to doomsday on, the S&P 500, the NASDAQ, the stock indices. Suddenly, everybody was bullish, and now everybody is a bear. Everybody is saying, this is it. We're going to see the biggest drop ever. And we might see more pullback. Don't get me wrong. But I wanted to just take a little bit of a check on this rally and just talk about it. First of all, if you've been somebody who's been bearish on the market, you've had a terrible year, right? If you're somebody who's been short equities or you've been betting against the overall stock market this whole year, like if you've been in the bear camp, it's been the wrong camp to be in. We've had a lot of fun over on the bull side of things. The AI trade has been wonderful. It's been really strong. And you're going to have, when you have violent moves up, you're going to have violent moves down too. And here's the thing. If you are bullish on this market, as I am, in the bigger picture, these sorts of moments are actually like Christmas time. These are the times where I like to go or look to start going shopping. Some of my best trades in my trading career have come from big sell-offs in stocks and then trading the indices, looking for the way back up. Or in some cases, if things look really, broken, I've had some money made on the short side as well. But I typically find it to be a little harder to be on the short side. That being said, if you've been short the last few days, you've had a great time, right? The market's been really falling hard. Think about the risk reward for the shorts out there. If you're somebody shorting this market, right? The risk to reward on these kind of moves, man, woo, that's great. There's probably a lot of people who have been on the short side making tons of money on this move. I have not been making money on this move. I've been losing money on this move. I've taken 2 different attempts on the NASDAQ and both completely flopped. So am I just going to give up and start crying? I might. No, if you're not able to be someone who, I have to say this carefully because I don't want people to, mess it up or abuse this thought. If you're not somebody who is willing to take risks or, step in when people are scared, you shouldn't be a trader or you shouldn't be an investor. Now let me put a big asterisk with that. I am not saying that I'm not glorifying people who go out and take huge risks every day and leverage their accounts. In fact, I criticize that heavily on my channel. What I'm talking about risk is I'm saying very calculated and controlled risk. If you can't step up and take a swing, right, like a baseball swing, if you can't swing the bat, then you shouldn't be playing baseball. So sometimes you're going to strike out. Sometimes you're going to miss a shot. Sometimes you're going to miss, when it comes to trades, I think a lot of people will look at me or other influencers that are in the trading space, and we get it wrong too. And when we do, people are shocked by it because usually social media only shows you when people are right. I've been wrong on my entries on the NASDAQ the last few days, but I've taken very small controlled losses and I haven't felt the full force of this sell-off because I'm using stop losses, which is a beautiful thing, right? So my stop yesterday I was so thankful for my stop loss yesterday because you know what happened with my NAS trade that I tried? I did something like this and we stopped out and the market has kept going. So this whole move, this whole additional sell-off, I haven't felt that one, right? And then before that, I stopped out and I didn't feel the whole sell-off there. That's the beauty of stop losses, that you can kind of wait for the next zone, which is exactly what I'm trying to do here. So I do have a plan to take more attempts at longs on the NASDAQ. Let me be very clear. I am still bullish. Take a look at the daily chart. We've got moving averages here. This is the 20, the 50, the 100-day, and the 200-day moving average. I remain bullish as long as, first of all, the fundamentals still look good to me, which they do. So far, earnings have been very strong for the big companies. We've seen increased probabilities for rate cuts this year. The labor data is cooling but not crashing. Growth is under question, which I think is the source of why this sell-off has been kind of aggressive. But let me be very clear. We could see much more downside. I'm not saying, oh, this is the bottom, guaranteed, we're going higher. Please understand that when I share my opinions here, I talk about this frequently. I take multiple attempts when I am bullish or bearish on something. Oftentimes, my entries are wrong. You got to stay positive. You got to stay swinging the bat. You can't just, oh, if I strike out, I'm gonna go, pitch a fit in the dugout, right? If you're a baseball person, I'm not a baseball person, so I don't know where all the baseball references are coming from. But I did play baseball when I was like 10, if that counts. Anyways, we got a lot of stuff to talk about. The NASDAQ is top of mind for me. Gold, I am also out of my gold entry. So we'll watch gold here today, see what happens with that one. This one, still like it to the long side. Momentum still to the upside. We actually pulled back to the 50-day moving average. So I don't mind, watching and waiting to see how price reacts to this area. But from a pure price action standpoint, we've still got an overall upward trend. We've just seen a big pullback in that uptrend, and that is perfectly fine. So, where am I wrong in all of this? Where could I be dead wrong about all these ideas? Well, if gold comes down all the way to this 2300 level and starts breaking it, then I start getting cautious on the gold trade. But I'm not there yet, right? I'm not thinking, oh yeah, this is it. The gold is topped out. I don't call tops and bottoms in the markets, right? I'm a trend trader. I don't try and, I'm not a fortune teller. I'm not the most brilliant genius you've ever met on social media. Like, I don't try and call the top of a upward trend. Gold has been a monster uptrend this year. So is the NASDAQ. So is the SP500. I make the majority of my money following what the market is doing in a calculated and controlled risk way. If that makes sense, do me a big favor. Hit the thumbs up button on the stream if you're enjoying it. Help us out, support this show. One thing I do pride on the content that we put out is we try and stay as transparent as possible. Wins, losses, drawdowns, win streaks, we share all of it together in this community. So if you appreciate it, do me a big favor, hit the thumbs up button. Look at silver, guys. Silver completely fell apart. Silver down 4.3% today. My goodness. This is another reason I'm very thankful for a stop loss. I entered silver over here, had a stop loss here. When we fizzled out here and rolled over, I got out of that trade, and I'm feeling like a hero right now on silver because I made good money on silver without taking part in the big sell-off that came after. Really interesting there. F you, Tony, please stop spamming the chat. I'm not going to take in. I was going to look. You know what? I was going to look at NZD CHF. But now because you said it so many times, I'm going to purposefully not look at NZD CHF. So you ruined that for us. Also, please stop spamming oil. I know you guys want to see charts, but you got to think there are almost 500 people watching this live stream between all the different places we're streaming this. I'm going to go to as many charts as I can, but your chart is not more important than everyone else's. So please don't spam the chat. That's not cool. That's like the guy who cuts everybody in line and acts oblivious to it. Don't be that guy. Okay, so another trade that I'm in is TLT. TLT's coming back a little bit. We got yields dropping off. This also suggests, at least to me, that we've got some economic weakness stuff going on, which also would suggest oil would be down, right? So oil's lower here today. Silver and gold down today. It's looking more and more like we've swung, and I've been talking about this, we've swung to the other side of the Fed's concerns, right? In my opinion, this is why rate cuts are very likely. Also, let me not miss the news. Hold on, guys. We are breaking news coming in right now. Okay, we got advanced GDP numbers, unemployment claims. Both of these things have the potential to move the markets pretty big here today. Let's keep an eye on that. Indices just moved lower. Gold just moved lower. Gold's all over the place. Hold on. I'm going to switch over to the all markets view so we can take a look at this, see what GDP figures are looking like. Dollar's up. Maybe that suggests a little bit of strength in GDP. Wow. Hold up. Wait just a second. Okay. 2.8% GDP compared to forecast. Whoa. Okay, that makes things a little interesting. So now you're talking about advanced GDP coming out way better than expectations or higher than expectations. Is it better? Is it good or bad? That's what everyone wants to know, right? A little tricky because you want to see rate cuts, but you also want to see decent growth. This is a good stance for growth, but not a great one for rate cuts. Remember that if the economy is growing or expanding rapidly, that leads to prices going up because people are out there spending more money. So we actually see the NASDAQ and S&P bouncing just a little bit. Dollar index, pushing up here. Gold, not going to love that. off of the first reaction. Anytime you get a stronger than expected GDP statistic, I would my first reaction to that would be gold is probably not going to love that. But gold is already down 1% on the day, so you know, it's going to take something pretty strong to push it lower. We also have got advanced GDP price index came out lower than expected, so some confliction there. Durable goods came out much lower than expected month over month. Core durable goods came out a little higher. I'd say this is a mixed report. You know, you have a good mix in here. You also had the previous GDP revised a little bit lower, down from 1.6 to 1.4. So mixed, I would say. The volatility index continues to push higher and higher. Guys, it was up like 25% yesterday. The VIX screamed higher yesterday. And what does that tell you? That tells you this market is injecting fear into itself right now, right? It is getting a booster of fear because of everything that's going on. You get the market selling off. You've got concerns about the election, who's going to win, who's not going to win. You've got people who are concerned about if the Fed is going to cut rates or not. You've got really the big one that I see is, are we really starting to see the consumer start to crack? Here is the consumer discretionary ETF. I talked about this yesterday with Chris Pulver when he was on the show with me. Chris and I discussed the consumer side of things. And it's so important to the economy. If the consumer is feeling they're beaten down and they got bruises and bumps all over them, right? The consumer and what does that is like high inflation or people not having jobs. If the consumer's feeling in pain, they're not going to go out and spend money, and people not spending money out there is not good for the economy, right? So the consumer, how are we detecting weakness in the consumer? Well, there's a lot of ways. Some of the big data points that we talk about so frequently would be things like retail sales, which has been coming in really weak recently. So take a look. We'll go through the last couple of retail sales figures compared to forecast. Remember, the red dot is our forecast. 3 times, well, actually, 2 out of 3 times we've had worse than expected retail sales, right? But you can see that the retail sales month over month growth has been at like 0% for the last 3 readings, right? 0.10. What does that tell you? That tells you that retail spending is slowing down, right? Over here, look at this. This was different. In 2023, you still had the consumer out there spending and doing A-okay, even though you had inflation going up. But as inflation stays high for a suspended period of time, it starts to hurt, right? Anyone else feel a little bit of pain when they go to the grocery store? You're not alone. Because, you know, inflation eats away at real purchasing power of your currency. And this is not something unique to the US. This is global, right? We all saw a higher period of inflation across most of the major economies of the world. And unfortunately for smaller economies of the world, most of them got it worse, right? Inflation is certainly not just a first world problem. If anything, it is a more impoverished nations, way more painful to them. You know, that's the harsh reality of inflation is it's very painful for places where their currency is not strong to begin with, and then it gets massively devalued during tough times. Anyways, my point with that is there a global slowdown in the works? And that's the concern today. That's the concern this past week. People are saying, look, the AI hype is great, but the consumer is starting to really hurt. A couple other indicators worth mentioning is take a look at Nike stock. Nike stock gotten killed recently. Again, on this channel, we don't talk just FX. We don't talk just commodities, just indices, just stocks. We talk everything because the market is a living, breathing thing practically. And there's not one chart that rules them all. They all are just pieces in one big puzzle. So when we talk about Nike stock, or we take a look at UPS, which is a shipping company, right? Or they transport products and packages and things like that. When they show up and they're having a tough time, or Tesla's revenues are down by a big margin, and direction with the company is looking rough. When you have stocks like this dropping out of the floor, it brings up the question, is the consumer and growth going to struggle going forward. So I really think that we are on the other side of not the other side of inflation, but we've seen some progress in inflation. And I think the attention now turns to this little section right here, the economic growth. In the last few years, we've paid a lot of attention to this section of the Edge Finder, the inflation data chart. But I think going forward, we're going to find ourselves as a community spending a lot more time going through economic growth statistics and labor market data. So my regular friends here that watch the live stream each and every day, I'm just going to say, I think I was thinking about this yesterday. The upcoming NFP report next week will be, in my opinion, possibly just as, or maybe more important than the next CPI report. It's kind of a big statement to make, but I think we're now seeing a bit of concern about growth. And growth, I think you want to see, if you want the stock market to bounce, you want to see growth actually stay strong. That's my opinion. I could be wrong about this, but you actually, in my view, want to see growth like we saw today with the advanced GDP numbers come out better than expected. You actually want to see good news be good news, right? For a little while, what I mean by that is a lot of strong news has been considered weak for the stock market simply because it's going to mean they can't rate cut yet. But I think rate cuts are coming. The question now is, can growth hang in there? I think that's been my pivot in this last few weeks, and this GDP number was a good start. So we'll see. But the Nasdaq down just 0.3% now. We were down more than that. A little bit of a bounce here. I'm watching this level here today. There's several things that I want to trade here that I will be sharing inside of our Discord channel. Also, if you guys aren't in the Discord or Telegram, both are free to join. We'll drop the links to both. If you guys have Telegram or Discord, we are sharing ideas and analysis throughout the week there. So do not miss joining those things for free. We'll drop the link to that in the live chat here if you're watching with us live. And we'll also have it in the description of this live stream as well. So if that's easier for you, you can find it there. Also, if we're on Twitter, maybe we could have a comment pinned below with that, just with all the pinned comment stuff. Any view about gold? Bandita from Twitter. Yeah, so here's gold. So I had a buy on gold. I talked about it yesterday, and it started out beautiful, man. It really held this support level, came up, and look at the way it rejected this level. So I didn't really like that. I really didn't like how technically we rejected this level here. It looked very promising. My entry went very well initially, and then we rolled over today and got stopped out. So I'm no longer in gold, and I don't love the way we rejected this. That kind of looks like a lower high to me, and if you look at the 4-hour chart, it even more so looks like a lower high, right? So that's a little concerning for me on the gold front. I'm going to keep an eye on it. If I take a trade, it will be shared inside of the Discord channel. So we'll see. US 30 still looking good. Yeah, let's look at the Dow Jones. Dow Jones, I like it on the daily chart a lot. In fact, this might be an entry for me pretty soon. I'm watching the Dow. As we pull back in here, you've got previous resistance here. This is also a huge psychological level right around 40,000. So I think if bulls are going to hold the Dow, I think 40,000 is an area they'll try to do it at. Clearly, there's been some buying going on here because we see the wicks on the bottom, but we also see price came all the way down like a dart lower and then stopped right here, right? To me, that shows you that, okay, there's some bulls here. Will the bulls hold it or not? That's up for debate. We'll see if they can hold it here. I think there's a good shot that they do. Let's just look at our moving averages for a second just to see as well. Yeah, see, we're retesting. Look at how strong, the Dow Jones has been. It went into consolidation, this big breakout. I mean, if you're a believer in the market here, I mean, this is kind of the spot. So we'll see. That's a 20-period moving average. So we came back to the 20-period moving average here after this big run up, big pullback. And I do kind of like the risk reward on the Dow. So I'm going to watch the Dow. I'm also watching the NASDAQ, as I mentioned earlier. So really my focus right now is the indices. With this pullback, they always pull my attention away from anything else, primarily when the indices are pulling back. That is always of interest to me to see if it's, because this thing could go lower, right? I've been talking about this. I'm trying to keep an eye on everything, keep my finger on the pulse here to see if this is worth trying to take another stab at, or are we going to go back and test this 200-day moving average? It's very possible that this thing, after all this gas to the upside, we see a bigger pullback to this 18,000 mark, that maybe we go back and test, this April low, right? The April low could possibly get hit when a market really sells off. I mean, you guys have to remember, look at what this thing did in 2022. We had a full out bear market, right? Just kept going lower and lower and lower. So it is possible that the NASDAQ is not done. I've taken 2 attempts already to get long on the NASDAQ, and we'll see if I'm right. You guys want to talk about AAII investment sentiment? Absolutely. I was actually playing with that yesterday just to see. We're going to get some latest data on that pretty soon. So let's look at, now please note, I do like to look at sentiment in times like this, but please note that this is reported once a week. And so is this the latest data? Yeah, I think it is. Okay, look at this. Really interesting here. Check this out, guys. So if you don't know how to read this, it is a very cool indicator for stock traders. We've added it to the Edge Finder here. It is the Investor Sentiment Survey. So check this out. What we can see here is the number of surveyed participants in the stock market that feel bullish, bearish, or neutral. This is neutral. These are bearish. These are bullish responses. Okay. So the latest data, so you can see we've changed over time. People, get more bearish, and then they get more bullish, and then they go neutral. Recently, just before all this sell-off, what were people feeling? They were feeling really bullish, right? We saw peak optimism around July 15th. Okay, let's go look at the chart on July 15th. You ready? July 15th is right here. This is like July 15th. So that was peak optimism, right? And this is where you have to be careful with and I was not buying the NASDAQ at this time for this exact reason. When sentiment gets really strong, it's not always an indicator that the market's going to go down. So it's not a perfect indicator. Oh, it's time to go short the NASDAQ or whatever. It's actually a terrible indicator of that, because oftentimes sentiment is really strong and the market keeps going. But it is something, for me, it says pump the brakes. When you see everybody bullish, right, or everyone bearish for that matter too, you got to be careful. So we do see sentiment now giving back a little bit. We're seeing now things normalizing just a bit after this recent sell-off. Naturally, a lot of the momentum traders, a lot of the people who were just super bullish during this time, they're going to be, jumping ship here, getting out of this move. And now we see the pullback. The question is, where's the bottom? And that's always the tricky part. I've already attempted twice. And, when I say trying to pick a bottom, I'm not really trying to pick a bottom, because this thing is still in a very overall strong upward trend, right? So I still think dips are worth buying until proven otherwise. Like if you see something like this, I won't be buying dips aggressively, right? If we break that 200-day moving average, that's a signal to me that I need to wait for momentum to pick up again before I try and jump in. Anyways, guys, I just wanted to do a quick shout out also to the Edge Finder. We're doing our summer sale right now. You guys might have seen that intro here before we started the live stream. Just shouting out our Edge Finder sale that's going on right now. With the Edge Finder sale, you get access to the commitment of traders data. You get access to our top setups algorithm and so much more. If you don't have a copy of the tool right now, it is the biggest discount that we're doing all year long. This summer sale, we started at the beginning of this month. It is ending very soon. You can currently get 50% off. But for stream viewers who are watching today, we are doing an extra discount for you guys. It is 55% off if you use the link in the chat right now to speak to a member of our team to get access to the Edge Finder, 55% off against our biggest discount of the year. So don't miss it. just chat with a rep. Someone from our team can get you the information. And more importantly, the reason we do it through a rep like that, so you have to speak to someone, is so that if you have any questions, because people often do, they're trained to help you with the technical questions you might have. So take advantage of that chat line, speak to us, even if you just have a couple questions about it. Take a second to connect with someone on my team and get to know them. They'll be happy to help. Okay, guys, real quick, we're going to take a break. And then we got Miko and Marco joining the show to talk more technical charts. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, we're back with Miko and Marco. Hey, guys, how you doing?
What is up?
Hello.
Hello.
Good to have you guys back on the show, and a very interesting time in the markets. We've actually seen some volatility on the stock market side, and just generally speaking, the volatility index, the VIX, is up a ton in the last few days. All sorts of different reasons to speculate as to why. One of the obvious ones is the U.S. elections coming up, the concerns about what's going to happen with global politics if Trump becomes president, what's going to change if Kamala Harris becomes a president. That's a big story. But at the same time, we see slowing growth, and it's earnings seasons for some of the big companies in the U.S. stock market. There is nothing short of some volatility in every direction here. I'm just curious in terms of where we could start. I wanted to just get you guys' thoughts on the dollar first. Actually, Marco, why don't you take us through, because I know you look at several US dollar charts. If you want to just walk us through a little bit of what you're watching here today, that'd be awesome.
Sure. So for me, I did take two big trades on the Aussie and the US dollar. So I had this flag form right here after some very nice bearish momentum, and I just got taken out like at the start of this live stream. So this was like an 11.4% winner, and then I took a scale in position exploiting this momentum, and it was like a 2.2% winner. So a very nice setup on the Aussie and the US dollar. Right now it looks to be breaking the structure a little bit, so it just broke this most recent high, but it all depends how this candle will continue. So if this candle can close maybe bearish, okay, it's going to be 10 more minutes, so it's probably not going to close bearish. But if the next candle can go down, then I would expect more downside, and I would be definitely a seller in this market because this is a major downtrend. Now the euro and the US dollar is looking a bit more flat and corrective, stuck between the low and the high. So I'm going to leave this one alone. I'm going to be more patient. And the final one for me, the tie trade, is going to be the pound and the US dollar. And it's definitely not showing me much potential as the Aussie and the US dollar is. It's just correctively breaking the lows, printing wicks all over the place. So I'm going to be a bit more careful with the pound as well. My focus is going to be the Aussie and the US dollar for the dollar pairs. But should I go for the JPY pairs as well?
Sure.
Okay. So for the JPY pairs, EJ was in a big downtrend. Took a small win right here. Now it's definitely breaking the structure. It's starting to reverse up, showing us some major bullish momentum in these two candles. So I would actually expect this to play out as a descending channel, after which I do expect an uptrend, and my bias is for this to potentially go up. So I'm going to be looking for buy setups. Next one I have is the Aussie and the Japanese yen. Also took a sell. This was a really extremely clean downtrend. But again, starting to reverse right now, this candle printing some major bullish momentum. So the story is the same as the euro and the Japanese yen. I would expect for a correction and a possible uptrend. And the final one for me is going to be the New Zealand and the Japanese yen, which was the same story, but I did not have any sell setups that fit my plan. And again, breaking the structure, broke the high just now and printing some big bullish candles. So let's see if we can get something like this and then a nice flag buy setup. overall, this is like the biggest week for me in 2024. 100%. Definitely took the biggest trade so far for this year.
Yeah, and going back to that volatility index thing for a second, I know, Marco, that being a trend follower, all three of us, the one beautiful thing about being a trader plus seeing volatility expand is that trends typically follow through a little bit more when you get the volatility index higher. It's also why they say the market is not trending most of the time. It's a lot of times when you get a very low VIX, a lot of things are not like following through as much. But then when you get huge spikes in the VIX, like 2020, things were just following through massively. Like they just kept going and going and going, which especially for I know Miko and I share a style of trying to trail stops. That can be the sweet spot is when things just go absolutely crazy in one direction. I didn't catch any of the yen pair sell-offs, but my goodness, I mean, if you were a trend follower,
Yeah, it was a big one.
yeah, I mean, those are some great moves. So very cool. I guess Miko, on the thought of the yen, what do you? I know we usually start with the dollar, but the yen is such a story right now. Are you watching any yen pairs?
Yeah, I've been looking at the yen pairs since 2 weeks ago, and when it broke structure, that's when I changed my bias on a few. I mean, they're all pretty much the same. But yeah, after this move here, I'm looking at some pullbacks now, but they have kind of hit some areas where I do think we'll probably see some upside at some point, especially like dollar yen's coming into a pretty big level over here. So I think we're probably coming up to some areas where we've had a big move. The market's probably a little bit stretched. Maybe you're going to have a bit of a pullback now. So I do think maybe for 2 or 3 days, if we see some upside, I'll start looking for some shorts again on some pullbacks. But yeah, I do think there is still more downside in the tank for them because it's a really, really impulsive move. It's not like we've slowly fallen over. It's like a really hard move down. So typically when we do see those type of moves, if we do get some nice pullbacks, we do probably see a follow through of that. So to be honest, I feel like dollar yen and euro yen are probably my favorite, but in general, we're looking at the yen pairs to pull back and seeing whichever one sets up the best. But we are coming to some areas where I do think we probably could see some buy stepping. I'm not really interested to take it up, but if we have a good pullback, I will be looking at some sells.
Okay. Yeah, no, definitely interesting. The yen is I feel like in the currency world, it's much more exciting right now than even the dollar index. I know everybody trades the dollar, and I definitely want to get you guys' thoughts on the DXY for a second too. But the yen, man, I mean, it is arguably so interesting because of the dollar still. We've had, some growth concerns out of the U.S. without getting into fundamentals too much. It looks like we're seeing some global slowdown in the economy. I'm not saying like, oh, we're entering a terrible global recession or anything, but that evidence of slowdown both in Europe, in the UK, and in the US is making the yen look a little bit more attractive because now you've got this Japanese economy that is a little bit more steady eddy and predictable compared to other economies that are looking a little rough. So the yen right now, if you're a believer that the global economy might pick back up or do just fine, maybe you're looking to sell the yen on this move. And if you're more on the I think global slowdown is going to continue, then you might be more on the buy the yen side. So very interesting stuff. I guess Marco, on the dollar index DXY, do you have any opinions on this one?
Yeah, sure. Let me take a look. So for the DXY, on the 1 hour, it's looking pretty flat, to be honest. 4 hour had some movement, so this is a pattern that tells me the market wants to go up. It is a V reversal in a range or a cup and handle or even a inverse head and shoulders, but basically it's a bullish pattern. The daily is kind of flat overall, but seeing a lot of selling pressure right here. Right now, a bit of a pullback. So yeah, I'm not sure if I could make my mind of the direction of this price action. It's very choppy. It's really much different than I see on Forex pairs. If I had to pick a direction, I think to the upside because of this V reversal and the range pattern. So that is my bias, a bit of an upside. And do you think so this weekend Biden dropped out of the presidential race, correct?
Yep.
Do you think it had a big impact on the markets? Because I can really see a big drop happened right after it. I'm not sure if that is connected.
Yeah, it's a hot topic for a number of reasons because yeah, my comment section has been so interesting. You guys know I lean on the fundamental side, so I've had to talk about the election a lot, which is not my favorite topic to talk about on the internet because I'm not a political, expert or anything like that, and people just they assume that what my bias is, but I've tried to stay unbiased with the topic, but the topic is so sensitive. So I'll give you the run through that I've kind of given overall. I think the market, generally speaking, the ultimate, market mover is Jerome Powell and the Federal Reserve, his team. They are really the ones that have the big sway. Now, fiscal spending and fiscal policies can certainly move the markets as well. But right now, I think what's moving the market is just the uncertainty of who the president is going to be. Actually, when the odds swapped heavily in favor of Trump briefly, the market rallied. And also, if you remember, for people who were in the markets at the time that President Trump got elected, the market absolutely ripped on him first taking presidency because naturally that side of the aisle typically leans more on the tax breaks for businesses side, which can cause stocks to pump. In whether that's good for the economy or not, that is up for debate. But the point is that generally is taken as positive. But I think that the bigger picture here is the certainty or uncertainty about who the president is going to be. So when the president looks very clear, like we have a very clear winner, the market says, okay, cool. Doesn't matter if it's Trump or someone else. It's just the market wants to know. When the market doesn't know something, it hates it. The market freaks out when it doesn't know what's going to happen, like when COVID happened, or when the Federal Reserve started raising rates all throughout 2022, and nobody knew when rate cuts were going to stop. That's why the dollar index was so hot to the upside, because people hate not knowing. And so whether it's one side or not with the president, people want to either know there's going to be a decisive winner, very strong chance of a winner, but not knowing in a more competitive race, which has trended more recently in the last few days. Harris, taking some odds back in the betting odds out there. I'm sure if anyone in the audience, you can look up predictit.org and you can look at the odds for the election. They've swung back to a closer. I think it's the last time I looked, it was like a 55-45 chance for Trump or Harris, slightly in favor of Trump. And so that uncertainty makes the market nervous. I think that does contribute to why we see stocks selling off. People just not sure what's going to happen is more important than who the president actually is. That's my at least stance on it. Not to go off the deep end on that, but that's
so it's good for us basically.
For volatility. It definitely increases volatility. Yes.
Yeah. Okay. Cool. Thank you.
Yeah. No problem. So we talked about the dollar. We talked about the yen. Speaking of stocks, which have been so interesting, Miko, I know you don't trade the indices, but we do talk about them. We take a look at them. What are your thoughts on this pullback? I guess from a trend analysis perspective, from you guys' take, I'm very curious to hear what you think on this. Obviously, we've seen a sell-off in the last few days, but is this uptrend still intact, or is this starting to show signs of rolling over? I'm curious your thoughts, and a lot of people in the audience are, I'm sure, as well.
So I think the uptrend is very much still alive, at least for the S&P. I'm looking on the higher time frames for this one, and it still looks very, very bullish to me. Yes, we're having a bit of a dip now, but nothing has changed in terms of the characteristics to tell me that, okay, we're about to reverse. I would still expect a bit more downsides. I wouldn't be surprised if it would come back to 52.74 before maybe we have another go at seeing a higher low, but I would still expect us to eventually come back to that high. I think in terms of maybe for the next few days, I would be open to some sales. I mean, I don't trade the indices, but if I was, I would be open to some sales to take some shorts, maybe on a retest of this low, but it would be shorter term, getting ready for some buys later on. I'm not convinced that we're about to push bullish just yet, but I think if we come back to some of these areas, 52.74, or even the high here, I think that's some smart places for some long. So yeah, I do think we'll put in that higher low soonish, but I do think we've probably got a bit more downside left.
Okay. Yeah, fair enough. One more for you while you're on the subject. Try US 30, because this, from a technical perspective, I feel like you might like this one on the daily. This is one
Mm.
I've been watching too. I feel like it's hitting that support level. I'm curious if this one looks better or worse or about the same to you as S&P.
In terms of buys, it looks a lot
Yeah.
better where we're trading because you can instantly see where we're rejecting and we're back there again. So if I was looking to buy, I would 100% be looking at US 30 rather than S&P. I know there's probably some minor support here, but not enough to convince me. Whereas US 30, you've had a really nice break to the upside and now prices kind of come back down. So it's in a area where it does make sense for a high low to form. Whether it does or not, of course, we'll find out. But in terms of the location, I like it. And I like the 4 hour as well because it's given a lot of wicks there. So it does look like we're starting to struggle there as well. Yeah, low time frames a bit sideways, but I like the wicks there on the 4 hour. So at least we're seeing the market actually show respect to that level. So yeah, I mean, in terms of the direction, again, it's still very bullish. I use the daily and the weekly to come up for bias, and to me, that still looks very strong. So I would expect to bounce. Whether we get back to the high or not, that's a different question, but it's a smart play for a buy, I would say.
Yeah, thanks for answering that. Again, I think I like the technicals a lot on the Dow right now, so I'm watching it myself. Marco, same question to you. Indices, any of them, you could pull up the Nasdaq, the S&P, the Dow, whatever you want to look at. Just curious your thoughts on this from a trend structure perspective. I'm curious what you think.
Yeah, sure. So looking at the S&P on the daily, the momentum is definitely down for me personally. So if this was a Forex pair, this would be a perfect reversal because it has a really nice kind of ascending channel. Price is slowing down on the top and then a really big signature of bearish pressure. So I would say this leg has a high probability to actually continue down and possibly be a bigger correction. Now, it doesn't have to be a huge downtrend. It can be, as I said, just a correction, but I would expect a bit more downside here. So maybe something like this to happen and then for the price to possibly continue up. So my bias is for this to go down just by gauging at this leg and in this leg of momentum. Now, the US 30, if I take a look, again, gauging the momentum, it has big bearish candles on the daily chart right here. Sellers are definitely in control of this market, so I would not be surprised if a pattern forms that I call the V reversal and maybe a range, and that is a bearish pattern. So I would expect downside if that fully forms. So if we can get another leg down like this, then it's game on for a downtrend, basically.
Fair enough. Yeah, no, I mean it's an interesting one because exactly with the points that you guys both just made, Miko, you kind of lean a little bit more on the it looks bullish. Marco, you're more on the it leans bearish side. I think that conveys the point that a lot of people are feeling right now. Whether you're bullish or bearish, the market has shifted. It's no longer just an obvious, screaming uptrend. Maybe the uptrend is still intact overall. And if you're looking at a longer term perspective, when I started the stream, I was pointing out, I really like using moving averages on the indices over the long term because, it gives me a longer term kind of perspective on the daily of where we're at. And stock traders notoriously love like the 200-day and the 100-day moving average to see where stock equity prices are generally moving. So, I think that I think there's probably a middle ground between both of you guys' thoughts. That's fair. I mean, we've broken the momentum. I think both of you mentioned that momentum to the upside has broken down. The question is, this is a nicer, as it does squeeze down, is this an opportunity to pick up some low prices? Or are you more skeptical and maybe, wait for, a bounce, a breakout? That's the cool thing about having you guys both on the channel. I know we all have slightly different ways of trading and viewing the markets, but there's this idea that maybe you're both right. Maybe there's this idea that we see momentum continue, and then maybe there's some great longer term buying opportunities that show up. But then also you could trade the way down, and then when the momentum starts to break back up, then you're back in at good prices too. So there's like ways to do different styles and still make money. That's why sometimes I've had when I get into looking through social media, I'm sure you guys see this too. There's always people who are super arrogant about their particular way of trading, and it's like, if people are making money, who's to debate whether or not they're doing it right or wrong? So, yeah. Anyways, last thing we got to look at, we always look at it, is we look at metals too. Let's do this. Marco, actually, let's do Miko. I want to talk silver for a second, and then we'll go to Marco too with this. Silver's down 4% in one day. Absolutely turning around here. One just speculation I would have is that if the odds for Trump winning the presidency are higher, it's not particularly great for metals in a specific reason. Number one, a lot of people might speculate that a lot of spending could turn into growth in the economy, and strong economy is usually not considered great for metals. But it also could mean that he re-escalates things further with China. And in 2018, China and the U.S., the trade war was beefing. Trump was swinging punches at China all the time over goods and imports and exports and all this stuff. Anyways, silver is a industrial metal, and so we're seeing a huge sell-off here. I wonder if maybe it has something to do with the election, so on and so forth. But regardless, let's talk technicals for a second. We've seen this momentum break to the downside, at least in the short term. Miko, buying opportunity, or has this broken?
It's difficult because for me, silver is still bullish on the higher time frames, as I would still be expecting higher prices, but I must admit it's not looking too particularly great. I was expecting us just to kind of continue from this move and just continue back to the high. So when I saw this, kind of surprising. For me, again, in terms of market structure, that's kind of how I view direction. So we've got the higher highs and higher lows here. So technically speaking, we can pull back anywhere within this area and still go up. But based on how we're moving here, it's definitely less convincing. In fact, if we were to have a pullback and retest some areas up here, I wouldn't be so against looking for some sells. Whether they go pretty far, it'd probably just be short term, but I wouldn't be so against some sells around that area for silver. I think it just depends what we do as we approach some of these areas here, because this is our last low, which gave us that big push. If we can slow down, maybe throw some nice rejection on the daily chart, maybe we do push back up again. Maybe we do. Because this is a really nice move. There's a lot of momentum there, and this still looks really corrective to me. So I haven't lost hope that this is the bigger move still. But I need to see a lot of evidence of us slowing down and this bearish momentum taking a bit of a breather. I think if you're in the lower time frames, I think on the short side of things, or at least for maybe 2 or 3 days, we could see some nice sells if we have a good pullback. But I'm still keeping my eye on something like that.
Okay.
So,
yeah, fair enough. I too was on the bull camp for silver, and I made a point earlier today. I was really thankful for my stop loss getting me out of. I didn't make a ton of money on silver, but I did make some money, and I can only be thankful that I made something when this sell off has happened today. So I stopped out for a small profit, and it's vindicating today. These are days where I'm thankful for a stop loss. That's the other thing. People get frustrated when the markets chop around, because they're like, I just get chopped out and then the market goes back the other way. I'm taking my stop loss off. These times where volatility gets crazy should be times where people are thankful for stop losses, because when things do follow through and you're on the wrong side of that follow through, that's no bueno, not fun. Same question, Marco, metals, gold or silver, either one. Just curious your thoughts here. Are these charts broken? Is momentum gone? Or are these dips to look at?
Sure. So for gold, the quick analysis is that we broke this major high, and I really thought we're going to get some follow through. That didn't happen, so we're back in the range, and now it's just, in my personal opinion, it's going to continue doing this. So just being flat and range bound. I would focus on looking for these legs again. So basically getting a bullish breakout and then an actual continuation candle, which did not really happen here. There was a bullish breakout and a clean close, but the next candle was a big retrace. So a range-bound market on gold, but silver has definitely broken the structure. So it broke this major low. Let's see how it will close. Again, we still have some time for this daily candle to close. It all depends what happens next. Again, it can still be like with gold, that we just retrace and go back into the range as we were seeing here, or if the next daily candle drops and closes below, well, that is a very bearish scenario for me. That would be double confirmation of the bearish momentum, 2 daily candles dropping down, and it would be a signal that the market really wants to start a potential downtrend. So the next daily candle, I would say, is going to be decisive.
I would also mention that, while I was on the topic about industrial metals, we all should know this old expression. They call copper Dr. Copper. I have no idea why, but on Wall Street, they call Dr. Copper the indicator of the best indicator of global strength or weakness. Copper is used in like everything. So when there's a huge demand for it, prices going up. When there's not demand for it, there's prices going down. So we see that also probably hitting silver as well today. So worth keeping an eye on copper, even if you don't trade it. It's a pretty good indicator of the global demand for raw materials. Last one, while we'll go back to you, Marco, just for a second. Go back to Bitcoin. And just, with all of this stuff, as of now, the conversation has gotten a lot more serious with the economy globally, and things are a little concerning. Is Bitcoin going to just drop out of the skies here, or are we just going to keep range bound? We've not made a serious breakout one way or another in a while. So what are your thoughts on this one?
Well, as you were saying, in the last couple of weeks, the hype has died down. So it's not really in the news. It's not really online. No one's talking about it. At least that's what I'm seeing on Twitter and on YouTube. But as far as the technicals go, I really thought we're going to drop here. Instead, we just broke this major low, printed a huge wick, and bounced heavily. So now I can draw some potential trend lines, and it would kind of be like a big descending channel. I do have my levels. My levels are, of course, going to be this major low and this major high. Until we hit any of those levels, for me, this is a very corrective and range-bound chart. So I would just expect a range-bound market, especially because there is no hype behind it. The stock market is now dropping as well. So yeah, I would actually expect this to drop, to be honest, because the more it ranges, the more hype dies down, the less demand goes up. And I think we're going to see a big drop. Unless there's some crazy new event and everyone starts talking about it and everyone starts buying it again, I do not think this is going to be a very bullish scenario.
Yeah, I typically agree. The Bitcoin is super sensitive to the economy, whether people like to admit that or not. It just moves too closely with what economic outlook is. Same question, Miko. Bitcoin. Any opinions on this one, or just staying on the sidelines with it?
So yeah, my outlook is very similar to Marco's. We have this big descending channel, and after we rebounded off the low, things were looking pretty good for Bitcoin. And I was wondering, okay, is this going to be the next leg? Because we had a lovely move here. Yeah, this is potentially the big correction of that for the market to continue. But the big thing I don't want to see for Bitcoin in terms of continuing is if we do reject the high here, like we did over there. And that's kind of what Bitcoin's doing now. So this is not looking healthy. And I kind of agree with Marco. I think unless we see some really strong momentum from somewhere to break the high and get the ball rolling, unless we see some big move from somewhere, I think there's a greater chance we're probably just going to roll back over, come back to the low, and that could even mean even more downside after that. So it's not looking good for Bitcoin in my eyes. I had a quick look at Ethereum. That's not looking hot either. But Bitcoin, the fact that we're failing at the high, yeah, I think that's a bit of a red flag. And if we keep that up, I feel like back to 54K is a reasonable guess.
Yep. Well, thank you guys both for coming on today and sharing your thoughts. I know we just touched on a lot of different markets. We went for a good long time. I just want to ask everybody in the audience, these guys, we don't pay them to come on the show. They have their own social media followings. They love the markets just like we do here. And I just want to shout them out. If you guys are not already following and subscribed to Miko and Marco on their own social medias, we've linked them in the chat. Please do us a big favor. Make sure to go show them some love. You can find both of them on Instagram. You can find them on YouTube. I think you can find Marco on Twitter as well. Marco's Trading Journey, or it's just Marco's Journey, right?
Yeah, Marco's Journey.
There you go. You guys can find them all over socials. Definitely, please go do that. It just supports the show a lot when you go show support to our to our guests who make the show as quality as it is. So guys, thank you for coming on, and we will see you back on the next one.
Appreciate
Thank
it.
you. See you next week.
See you
Bye-bye.
guys. Yep. Always good to have both Miko and Marco as part of the show. They've been long-term contributors to what we do here in A1. And it is a group effort, right? These shows where we bring in differing opinions, I think it's incredibly valuable to do these sorts of collabs where we get the thoughts of different traders, different perspectives, different styles. It's powerful. And I love it when people disagree on the show. I think that's the best part. When you get conflicting views, makes things a lot more interesting, because then people have to kind of stand their ground a little bit on why they think certain things. And I love that. So anyways, we're going to now pivot here. But before I do that, let me just remind anyone in the audience who is not already an Edgefinder user, we are currently doing a huge discount. It's 50% off right now. And for stream viewers, we're doing 55%. So if you guys want 55% off the Edgefinder, we're going to drop a link here in the chat to where you can get access to our data, to our tools. We are working day in, day out on this. We have a team of developers and a support staff and all sorts of things that empower our users and create these tools and upkeep them. So if you're not already an Edgefinder user and you've been thinking about getting it, just a heads up, I mean this so real. This is the lowest price that you can ever get the tool for. 55% off is the biggest discount we do. So if you're somebody who's been thinking about it, or you're like, yeah, I think I might get it sometime, this is the best chance. So send us a message. Let's see what we can do. If you need help with the payment plans or something like that, we do also offer that. So please just chat with us on our support website by clicking this link, and someone from our team will help you out with getting a copy today while that discount is still available. Okay, guys, real quick break. We're going to set up the stream for our next guest to come in. It is Forex James from EliteTraders.io. Stay tuned. This is a good one. Show only gets better from here. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we are back with James. What's up, man? Welcome back to the show.
Hey, Nick, how are you?
I'm good. It's good to have you here. And, we need you here today. The markets are going crazy recently. Volatility index, I was talking about this with our last guests, has shot up higher. VIX is at 18 today, which is very different than the low VIX that we've seen for most of this year, down in the 12s and 13s. And this is just a change in the kind of behavior of the markets recently. We see indices selling off, gold is selling off too. What are your kind of, I'll let you go wherever you want to go with this, but where are you watching most in this market right now?
Well, I think these markets have actually shown who can adapt and who can adapt well quite easily. So for example, Nick, I'm not sure if you remember, but I was trying to short the yen for quite a while. Had to liquidate some of those positions. I'm still in some. However, that was my fault. I wasn't looking to adapt, the intervention that happened. I thought it was just, sort of going to be a quick intervention, maybe a little slight drop, consolidation, and rise back up. I didn't really foresee the continuation of the downside, and that's because I wasn't really looking too much at the external factors. I was more just set in the bias I had because I've had that bias for so long. And that's a good example of, no matter how skilled you are, you can still end up making mistakes.
Sure.
But yeah, even like gold, the indices, the yen, we've seen quite a lot of markets change the way they're moving, and they've done it very quickly, and it's been very unforgiving. So I think this is, for newer traders that are in the markets that have been trading for sort of the past 2 months, this will be a bit of a shock. And I think it will prepare them for how trading can be. It can be very violent, and sometimes it can happen with very little warning.
Yeah, no, that's so true, James. And I always talk about this with the reference of the VIX. Most traders, they trade strategies that well, this is every trader really. Strategies usually work well in scenario one, which is in yellow, or
Mm,
scenario two, which is in blue. Most strategies do not work well in both scenarios. When you have really high spikes in volatility, that usually entails markets selling off. It usually entails charts moving way further than you think they will in a singular direction. And then when you get these low VIX, some environments, you get more, choppiness. You get more kind of slow chugging uptrends in the S&P 500, et cetera. But it just, to your point about it changing so quickly, I mean, there it goes in just a few days. You've got a very a regime shift, if you will, on the way markets are behaving. And
mm,
who's to blame you on the yen? I mean, that I totally, see what you're saying there. It's been one of the easier trades to just be short the yen on pullbacks. I too have been involved in that many times. And is this the big shift? We'll see. I mean, the question is now on the fundamentals front, whether or not global economies are truly slowing down. And if that is the case, the yen might have more
mm.
upside, and which could lead to, dollar yen, euro yen to continue lower. But we'll see. I mean, we talk about frequently, I know you and I have spoken about the Japanese economy not being particularly impressive, but there is another component to that. If this is, let's just, I just want to show you a visual for audience members. Let's say that the red line is Japanese economic growth. And let's just say it's not very promising. We've talked about that many times. And let's say that, in a good time, this is other average economies. They're doing better. So people sell the yen and they buy the dollar, they buy the Australian dollar, they buy the Canadian dollar, but they sell the yen. But if this changes and we see other economies struggling, the yen doesn't change too much. Suddenly, it's the other way around. People go to the yen because it's like, oh, this is stable and reliable, whereas the other ones are falling apart. So maybe that's happening. I don't know. But I'm curious, James, on the yen side, what charts are you most interested in right now? And do you have any ideas or setups that you're watching?
Well, I'm currently in. So I had to liquidate. Took my biggest loss of the year actually on the Australian yen yesterday. So when I came on stream yesterday, the energy might have been a bit off because it was it was a bit sore. I'll be honest. It was one of those trades.
Oh, I was limping yesterday, so you're good. Don't worry about it.
So
Nasdaq and gold did not treat me very nicely.
yeah, no, it's been interesting times. So yeah, I'm in the Australian yen still. So I had to liquidate an initial position which was up here. I'm still in my secondary position down here. That one is low risk, so I'm happy to just let that one run. Again, dollar yen still in this one. Got both of my initial positions running. We are seeing a nice rejection off of the dollar yen on this sort of daily level of resistance, and this was still is actually my trigger. If this level's broken, I'll have to just accept the losses on all of my yen trades and I'll just cut them. Maybe enter after Wednesday next week. We've got some yen news then that will be very important. So that's about it. I'm also in a GJ trade, but that's much smaller on a very small account, so it's not too relevant. But yeah, essentially I'm still long. However, if I know now if I knew then what I know now, I probably wouldn't be in these positions because I've kind of got myself into a difficult spot. But I need to reiterate that this is risk I was willing to take. The loss I mentioned, percentage wise, isn't a big deal. The drawdown I'm currently in on the yen pairs isn't a big deal. It's all relative to account size. It's just more the fact that I was this wrong when normally, it's not this bad. I'm not normally this wrong for this long, if that makes sense.
Yeah, well, and here's the thing. I think just going back to, I know I keep reiterating it over and over, but this concept of a market shift, most of the time, I will completely say that when we do get the big market shift, usually I'm on the wrong side of it most of the time because I trade what we're in. So if I'm saying, okay, we're in this environment, I'm going to trade like this. When this happens, nobody knows for sure when that shift is going to happen. So usually this is where I take drawdowns, is when we see a shift
Yeah.
back and forth between. So totally normal. And I think it also is good for the audience to hear when things are not going exactly as planned. And that's the reality of markets. It's such the social media world is such a gaslit community because people are always only ever showing you the screenshots that they want to see and hiding the ones that they don't want you to see. So I think talking about periods where things are just not going as planned is very helpful to our audience. And I hope that you guys as an audience recognize how important that is in finding people like James, myself, or others that come on the show that openly discuss drawdowns and things that are not going exactly as planned. It's really important. So yeah. Anyways, James, I'm going to let you take over the show for a little bit. Take us through whatever charts you'd like to go through. Before I step out, let me just mention to everybody who is listening, if you guys would like to check out what James does, his company, Elite Traders, has an awesome list of services and things that they do over on their website, elitetraders.io. You can also stick around, see if his content, see if his style is something that resonates with you. And, hopefully with these streams, you do find people that resonate with you, whether it's myself, whether it's James, whether it's one of our other many guests that make the A1 Trading Show what it is. It is a community-based stream that we do together each day. So, James, you got it from here, man. Enjoy it, and we'll see you on the next one.
Cool. Thank you, Nick. See you later.
See you, man.
Yeah, so guys, enough about the losses. That's 2 days I've told you guys about that. So moving forwards, this is gold. So I was talking about gold as well yesterday. I was explaining that I was looking to go short. I think this was a bull trap, and it turns out it more than likely was. So I'll run you through this. I actually put a video out this morning explaining all this, but I'll go through it again with you guys here. So essentially, we had the all-time high formed in April. So this at the time was an all-time high. Then we drop down. Then we come back up, and people are trapped. People obviously see this as a valid pullback to buy gold. Market's in an uptrend. We pull to the downside. People are trying to buy it. So they get trapped in here. Market sells off. Exactly the same thing happens again. We form a new all-time high. We drop down. We consolidate in a pullback in an uptrend. People start buying. They get trapped, and we come down and sort of sell off. And the same thing happened here. Is exactly the same setup. We come up, we came down, and I was looking for a rejection around here. Now, just to give you a bit more clarity on this entry, this wasn't just an entry on a singular candle. This was, if we draw the fib from high to low, so the low at the time was around here. So if we draw this, we can see that we just about rejected this 50% pullback. It wasn't perfect. And remember, the markets aren't perfect. So your technical analysis may be valid, but it may not look perfect, if that makes sense. So we did get this 50% pullback, and this was valid enough for me to say, okay, I'll take a stab. I had quite a large stop in place. My take profit actually was down here. We did see a bit of a slowdown in momentum this morning, so I just manually closed out. It was a short-term trade, not necessarily looking to start shorting gold for the long term. But yeah, you can see it here. We saw this consolidation, and I just wanted to get out. I did take one very small attempt at a long position. I can show you the results here so you can see they're real. So this is my Darwin X live account, so you can see real account. But yeah, we had the initial trade here, which was the short position, which was 1700. Then the attempt at a long position, which was only 340, and this is a 100k account. So you can see the risk I took on the buy position, which is much smaller than the short position. So going forwards on gold, I would actually like to see a bit of a lower price. I don't see really at the moment any reason that we couldn't come down into this level of support. And the reason is, if we look at the weekly time frame, so if we just look at how the weekly has formed, we've had a really strong, actually, let me just clear these drawings for a second. Really strong push to the upside with a very, very strong rejection to the downside. So we formed a really strong bearish hammer at all-time highs, which is already quite a strong bearish sign for me. We've also now seen this current weekly candle have a lot of bearish momentum, and it may close in the same way. It may close very bearish. So for me, that is a potential sign that we'll come back down to this level of support. So let me just bring these drawings back here. Delete this fib. So this would be my sort of next target. We have also broken below this 200 moving average as well. So really, I would like to see a little bit of a pullback to a slightly higher price and just come out of this oversold zone on the RSI. And then I may enter another short position and try and target this level of support. But we'll see. I'm not really actively trading at the moment. As I said, I've had a bit of a poor month trading, and it is the end of the month. I'm going away very soon at the start of August. So pretty flat on the portfolio at the moment. So let's see what's else on the watch list. New Zealand dollar. So if you were in the stream yesterday, you might hear me repeating quite a lot of things because nothing's really changed on my view. But the New Zealand dollar does look really nice, and I would really like to get in short. You can see I've got the trade planned, but we just didn't get the pullback that I really wanted, which is a bit of a shame. But yeah, it's a bit of a tricky one. The markets at the moment, if you're kind of not already in trades, it's very difficult to get in them because we've seen a lot of these initial moves. So yen, New Zealand dollar, pound dollar, we're seeing quite a large movement. And it's not really it's not forgiving. You know, we're not seeing much movement here to allow sellers to come in, or we're not allowing buyers to get out or whatever. So yeah, it's a bit tricky, but we do have this level of support on the New Zealand dollar here, which is currently getting rejected. Obviously, this is only on the first candle, so we may see this completely blown through, but the RSI is also oversold at the moment. So this may be the opportunity we get to see some sort of pullback here. Now, the issue is there's not really much structure to go off. We do have sort of previous lows around here that we could maybe use. So if we do get to pull back to this 50% level, I would go in very, very low risk. So stop basically just above this golden zone on the fib, take profit just back down to potentially form sort of a double bottom. And this would be the plan. But yeah, not too desperate to get into this one. I have a feeling I've already missed the move, which is a bit unfortunate. But it stays on the watch list. You know, anything could happen. Euro dollar. Actually, I can show you another one. If euro dollar is another trade I took, let me pull that up if I can find the ticker. Give me 1 second. Yeah, here we go. Okay. So euro dollar also was looking for shorts, managed to get in at quite a nice price here. It was basically as accurate as you could get, but you know, I'm not going to sit here and say that it was, you know, sniper entry, follow my trading model, because I'll be totally honest, this was luck. I placed this trade when I was laid in bed. It was actually, let's see what time this did happen at. 2 a.m. This isn't in UK time zone, so it was probably around 11 p.m. my time. So I just took this short because I was already bearish on the euro dollar, and this was after we got the news that Biden was dropping out of the election. So we did see quite a nice rally to the upside, and I thought that's not enough to change the course of euro dollar. It might get an initial market reaction, but it's definitely not that market moving. So I still placed a short and then scaled in and had quite a nice take profit on that one. So point is, my analysis stands. I'm still bearish on euro dollar and pound dollar. Euro dollar on the weekly time frame looks beautiful. Again, we've had this really nice rejection of this level of resistance, 200 moving average, also below price. The only problem is we've got these moving averages that I think we'll get blown through pretty quick. We've got the Credit Agricole target down here. This is for the end of the year, essentially. So if you don't know, Q4 is the fourth quarter of the year, which obviously is the end of the year. So that's something to keep in mind. So I am looking to short euro dollar down to sort of the 0.05 level. So we'll see how that one turns out. What indicator did you use? Well, I use my own indicator. So on here, let me just put it on. So I use, if it loads here. So this is called Golden Gates, something that I built. It's got pivot points, it's got a momentum oscillator, and it gives entry points as well, based on pullbacks, and uses the trend. But I don't use that. It's not really a huge part of my strategy at the moment. It's more of a confirmation. But yes, so there's that. Crude, I was looking for a pullback. Someone in the chat mentioned crude oil yesterday, and I did miss this initial move to the downside, but I would like to still get into a potential short position on oil. So potentially at this sort of 50% pullback level would be quite nice. Stop loss above these moving averages, above the golden zone, above the structure would be relatively safe. I use, safe is a loose word in trading, but secure maybe. Take profit down to this fib extension to potentially come down and test this low down here one more time and create that sort of double bottom area. Was looking bullish. What was looking bullish? Oil. I'm not sure what you're referring to. You were long GJ this morning. Yeah, I don't worry about being long on the yen pairs and losing money there. I am in no position to criticize that. But yeah, so yen has lost me a lot of money. It's made me a lot of money in the past, but recently it's cost me quite a bit. So onto Nasdaq. Nasdaq, again, I've been saying this for roughly a week now, but I have been looking for quite a low price on Nasdaq around this 18,000.4 area, or 18,400 area, I should say. And the reason is because we were very deviated from the moving average. I really wanted to see a reversion here, and it looks like we are getting that. And this isn't necessarily just obviously this move isn't just because we were due a sort of reversion. We obviously have earnings coming out. We have sort of a risk off market at the moment. So you can see gold's doing, well, long term gold's doing pretty well. We are seeing the yen do quite well, and we're also seeing stocks down. So risk off mode in the markets. So we'll see. I'm not too interested in trading the indices at the moment unless we do get a pullback to this level, and this would correct. Well, not correct. It would sort of stabilize price in my book. You can see on the weekly, this is a 200 moving average, very far away. Needed sort of a healthy pullback, and I think that's what we're getting now. So if we look in the past when we were basically at the same sort of place, we had a very, very extended price compared to the 200, and we had quite an aggressive move to the downside. This could be what's coming in here. So I actually wouldn't be opposed to going in short on the Nasdaq for sort of intraday trades. But long term, I only really go in for buy positions. It's not euro dollar a pullback for bullish. Not really sure what you mean by that one. Please have a look at Australia, New Zealand. Oh, hold on. I missed a message there. Why short EUR? Please, a bit on fundamental. I was buying as the Fed are about to cut rates. Yeah, so we do have the rate cuts with the Fed. So the thing is, when we have cuts and hikes, it's always viewed as bullish and bearish. A hike is always viewed as bullish, and a cut is always viewed as bearish. And when I say it's always viewed, I don't mean it is always that result. I mean, it's always viewed by the sort of retail crowd as bullish and bearish, because inherently it is. However, when you hear, so the ECB, for example, they were screaming and shouting, well, maybe not screaming and shouting, but it was very, very known what their plans were. And it came out and it didn't really do much. We saw some bullish movements, but it wasn't anything significant. And I think that's essentially what's going to happen with the dollar. So yes, we might get cuts, but firstly, you need to think, are these cuts already priced in? Because everyone knows they're coming. It's just a case of when. Is it September? Is it August? Is it the start of 2025? We don't know for a fact, although September, November seems very, very likely. So essentially, it's not going to be a surprise. It's not going to shock the markets when they do cut rates. The euro isn't doing too great either at the moment. It's stabilized a little bit from the political risks, but still not, euro's not found its footing really. The dollar, although again talking about the rates, although we do have rate cuts coming, I don't really see that as necessarily a huge bearish thing for the dollar. Maybe in the long term we might see a weaker dollar, but for now I'm quite happy with some bullish dollar. To add to comment about euro dollar, I see the current downside as a pullback for further longs, same with GBP USD. Can you tell me why? So what I will do, I've got a very, very detailed reason for a short pound dollar, but I want to hear why you want to go long first, and then I will show you. James, could you elaborate a little bit on risk on, risk off? Yes, definitely. So risk on, risk off is basically the basics of trading. So as soon as you learn about technical analysis and all the the very basics trading 101 stuff, risk on, risk off is essentially the next step from that. It's understanding what cycle or what are investors thinking of the markets, because obviously if you know what investors, or you can gauge what investors think, then you can sort of gauge which assets to go into, how the assets are going to move. So risk off is exactly what it says. It's when investors aren't wanting to take risks. I'm just trying to think about how to visualize this. So let's say we have, COVID. So COVID is risk off because investors aren't sure how long it's going to last. They're not sure of the long-term impacts, the short-term impacts really. So investors take money out of stocks, generally speaking. So they may go into like big pharma and other things, but generally speaking, NASDAQ, US 30, S&P, the general sort of index funds, they will head to the downside because money is being taken out of these assets. Then things like the yen, the Swiss, gold tend to go up, and that's because they're stable. So let's say the dollar crashes or currencies crash, for worst case scenario, what will still be there? Well, metals will still be there. Gold was obviously a used as a currency before the dollar, so that's essentially what it is. It's when investors are scared or fearful of the markets, they move into safe havens or safe haven assets. And then in reverse, when things are happy, when investors are cash heavy, they want to start putting money into the markets. That's when we see things like the S&P start booming. So for example, AI, that was risk on, because they're happy to take some risk on AI. That's why we saw NVIDIA do so well. That's obviously very, very summarized because I don't have loads and loads of time on this segment, I don't think. But yeah, risk on, risk off, it's actually very simple. So feel free to go and Google if you want a more in-depth thing, but that's basically how it is. GU, UK interest rates higher for longer. US will be cutting. The dollar IMO, GU is broken out of a range of support. Okay, Paul, makes sense. So I understand why you're saying that, by the way. I'm not here to try and make anyone feel silly or try and make you change minds or anything. I'm just going to show you my perspective. So I am actually looking for a big short on the pound, primarily pound dollar, because the dollar is very stable. In the short term, the dollar fluctuates a lot. However, it's still the dollar is a superpower. It's not necessarily just going to fall off a cliff, unless obviously something drastic happens. So when I'm looking for when I say long positions, I mean more long-term positions. It's normally against the dollar. So I am looking to go short on the pound dollar. And the reason is because there is a lot of data that isn't necessarily being publicized that much at the moment. And I sent this to Nick, actually. Let me try and find it. I'm not sure if I've still got it on hand. Give me 1 second. Let me see if I can grab it quickly. I think I've lost it, which is a bit unfortunate. But essentially, oh no, it's here. Okay, sorry about that. Cool. I knew I had it somewhere. I just wanted to show it. So this is a report by UniCredit. Now I've shown this before. I think I've shown it 2 or 3 times on the streams on Nick's channel. But it's pretty important because this isn't just a day trade idea. This is into sort of the next year, into sort of 2025. So the problem with the pound that we've got is that it's very, how do I explain it? I don't want to say it's overvalued, but it's definitely not where it should be in my book. If we look at the general state of the UK, and again, this is because the numbers don't necessarily reflect this, at least at this time. People can't, there's teachers, not doctors, teachers, nurses, average working people can't pay bills, can't afford to go to the shops, they can't afford food. So what we're seeing is food banks having massive increases. It's at the point now where food banks cannot handle the inflow of people. And it's not homeless people, it's people at work, it's normal, regular people. And we did see Labour come in, excuse me, which was possible light, but it's not something that will... It's not something that's now going to make the pound super strong. So if we look at the conclusion, if I can find the conclusion, here we go. We can see, I mean, I'm not going to read this. I've read this a million times, so feel free to screenshot it or read it on your own. I'll continue talking. But Labour doesn't have the power to necessarily fix this, because it's not just a government problem. This is a fundamental issue within the country that needs to be fixed. So essentially, there's lots and lots of issues that are building up in the UK. And yes, current numbers for the pound are fine. And I've been quite a big advocate for short-term pound bullishness. However, long-term, the pound shouldn't really be gaining any strength. This country is in a really big problem, and it's a big mess at the moment. So essentially, I'm looking for pound dollar to come up to around the 1.3 level, ideally, and that's, in a perfect world. And then I'll be shorting it. And the UniCredit document I just showed you, their target for the end of the year is roughly around this 1.229 level. So that's where I'm looking for. Obviously, this level might not be hit. I'm not sure where we'll be when I'm ready to execute. So I'll be looking to take this trade when we have Fed cuts, and that will give me a bit more of an idea on a good execution level. But this is just sort of a trade in the works at the moment, trade idea. So I'm not in this trade. Let me just make that very clear. I'm not looking to take this yet. It's more of a trade I'll be taking maybe in 2 to 3 months' time. So Paul, sorry, to get back to your point, I went off on a bit of a tangent then, but yeah, Paul, to get to your point, bullish pound dollar at the moment, fine, got no issue with that. I kind of agree, actually. But yeah, long term, pretty bearish. Yeah, Paul, exactly. My analysis is more in the long term. Been trading strictly euro dollar for the past 2 months. Def bullish for sure. If you think it's bullish, going for some longs, make some money. That's the beauty of trading. So yeah, I think let me just make sure. If you got any other questions, guys, please feel free to ask. Not here to just gatekeep. We are getting actually a nice move down on gold. If we can see this current hourly candle close bearish below the previous candle, so something like this, I would be looking to potentially short here. Excuse me, and take it down to the level of support. That would be ideal. So we'll see if we get that. Candle closed in about 10 minutes. What time did I come on? I'm not sure. I'm really bad at timing on here. So I came at 9:15. I think I'm overdue. There is another person after me. It's Chris. So A1 guys, please feel free to kick me off. I think it might be my time to go now, guys. So I appreciate all of you. Feel free to come over to my channel. Again, I explained the gold trade in a lot more detail there. But yeah, I will see you all very soon. Thank you for having me. Have a great weekend. I'll see you very, very soon.
Hey, Nick is going to join back here in just a second. James left a little bit early, but that is okay. So don't go anywhere. Nick is joining back right now, and the show is going to continue. So he'll be in here in just a second. In fact, here he is now.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up.
I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, guys, I'm back. Just going to update a little bit here. What we're looking at. Also, by the way, you just saw that. Check out Vantage if you have not already. Great brokerage for non-US traders. For US traders, we also have some other really good ones listed on our website. Might be worth checking out a1trading.com/brokers, guys. I'm going to put you guys on some free game today, okay? Got some free game for you. Chandler James, can we drop the free course link? So I'll just tell you guys something. From 2020, I think it was 2021 and 2022, well, and 2023, we've compiled over the years really some course material that is available to you guys 100% free, like no gimmicks. You guys can actually grab what most traders, most influencers that you guys might follow, they sell this stuff for like $1,000 to get their full course material and strategies. We give it out for free, and I'll tell you why. We're not just saints. We're not just doing it out of the kindness of our hearts. We do get something out of it. We get your contact information, where we can add you to our newsletter, where you can see some of our ideas and stay up to date with latest content we're putting out and things like that. If that sounds like a fair deal to you, if you don't mind joining our newsletter, you can get access to our courses 100% free using this link. Now, that is no cap. I'm not even joking. They're quality courses that I've spent a lot of time and energy with my team putting those together. So they are yours free today if you don't already have them. Look at gold pushing lower here today. Again, I'm thankful for my stop loss today because I got taken out of my trade here, and gold is pushing lower. The gold market no longer has a bullish reading on the Edge Finder, so I am officially on the sidelines with gold. You can see we have currently a neutral reading on gold. So this is going to mean no setups for me on gold right now. I've made my money. I'm not going to give it back chasing this move. And I mean, look at that, down 1.43% today. Gold is really selling off. You got the NASDAQ back down towards the lows here. You got the SP500 really taking a dip as well. And you got good old Dow Jones as well, which is hanging in there. And look at this, guys. The Russell is up today. What in the world? That is impressive. Got the Dow Jones up today, the Russell up today, NASDAQ down bad again, down 0.9%. I mean, that's back down to the lows. And I'm being very careful because do I love the NASDAQ? Absolutely, I love the NASDAQ. I want to buy it and buy it and buy it. But I have to control myself to make sure I'm looking for the right setups. And today I actually went long the Dow. So details on that can be found inside of our Discord channel. I mentioned this earlier, but I just went long the Dow inside of the group. All the details can be found in the Discord channel. If you are not already in there, let's our next free game here that we're going to drop is you guys can download the course that we just dropped. The Chandler James just dropped that for you in the chat. But also we're going to drop 2 more links: the Telegram channel and the Discord channel. If you guys like these streams and you like the analysis being shared, but you can't watch streams all day long, like if you're on the go, you guys can keep up with our analysis on Telegram too. We are posting a ton of stuff. Frank, who comes on the show regularly, he manages a lot of the readable content for A1 Trading. So he's putting out analysis, breakdowns. If you guys want to read about the economy, if you want to join our newsletters, they are free to join. The Discord, the Telegram, both have just been dropped in the chat. Whatever is better for you. If you're a Telegram person, if you're a Discord person, just grab that. link. Come join in. We share the same content in both places, but you can keep up to date with that. Okay, so look at that. Nas down almost another 1% today. Crazy. Really aggressive selling. The S&P 500 is hanging in there a lot better, but it's a tech sell-off here these days. I want to look at some individual stocks for just a second while we're on the topic. Look at this. Biggest losers today. Airbnb. That's an economy struggle stock, right? If the economy is not looking good, people are not going to go vacationing and Airbnb-ing. And that's the question right now. Is the economy hanging in there? Another super sensitive to the economy stock that nobody wants to say is NVIDIA. NVIDIA is hypersensitive to the global economy. If stuff isn't getting built, stuff isn't getting shipped, tech isn't being designed and created, yeah, that's not good for NVIDIA because NVIDIA supplies the chips. So if the chips are not in demand, down goes NVIDIA. And NVIDIA, by the way, guys, this is the story. There were just months where every day NVIDIA's up another 2%, another 3%, another 4%, like every single day. And look how quickly the Titans have been falling right now. You got NVIDIA down 21.5%. And I'm not going to say I called the top or anything on NVIDIA because I definitely did not. But is it worth mentioning that we discussed at length on these streams over and over how you don't want to get caught up chasing the Titan stocks? They can be really dangerous to chase. And this is why. And this is only, do you guys, I want you to understand, if this is your first time seeing a stock market sell-off, then first of all, that's incredible because the stock market's been so upshot that a lot of new traders don't even know what a stock market sell-off is. This is child's play. You think this is bad? I'm telling you what, if you guys were here during 2022, I had bags under my eyes. It was like the Grim Reaper was standing over my shoulder. It was so bad. The market was selling off all the time. Worst drawdown for me that I ever had was in 2022. I kept looking for breakouts and got smacked down again, humbled so many times by a true bear market. So to say that, imagine what we're seeing right now, but it goes on for 600 days. Not quite. Well, the sell-off, the carnage in 2022 lasted for 400 days. 400. That's a long time. That's over a year of violent selling that took place in the NASDAQ. So please understand, if you are somebody who is experiencing this for the first time and you're like, what is happening to the markets? They're just doing market things. It's just that you're new to them, and that's okay. But I'm telling you, it's always a shock. It's always a surprise when things completely shift, but it shouldn't be. And this is how you earn your stripes as a trader. You learn that, impeccable uptrends turn into, fast uptrends turn into fast downtrends at some point, right? These stocks, I love these companies for the long term. Amazon, Google, NVIDIA. But a lot of people are going to learn hard lessons during this time because a lot of people are messing around with leverage. They're trading these things on high margin accounts, or they're playing options, or and they're going to learn hard lessons, just like I did in 2022 and 2020. I mean, bear markets are where you earn your stripes. Somebody put that on a shirt and sell 1 million copies so I can earn back some of my losses. Okay. All right. Just joking. But no, I mean, these are usually times where I give back some profits. I'm generally positively correlated with the direction of the market because I'm generally bullish on stocks. I'm not one-to-one because I don't just buy and hold. I trade, but I'm generally more bullish than I am bearish on stocks, and I've been bullish. So this sell-off has been a little painful for me, but I am changing my exposure a little bit. I'm adapting a little bit to this time. I mentioned I'm long the Dow Jones, which is actually positive today, which is awesome. The Russell's slightly positive. Gold's getting hammered. S&P's down 0.5%. I mean, look at the NASDAQ down 1.3. It was down 3.5% yesterday. Got smacked down by Thor's hammer. Okay. That was the biggest single day selling on the NASDAQ that we've had in I don't even know how long. It's been so long since we've had that kind of sell day. I don't even know if we had a 3.5% sell day. Yeah, I don't even know if we had a 3.5% sell day in 2022. Yes, we did. Okay, there it is. A couple. Yeah. I mean, that's 2022 vibes, and those were like continuous, right? That's the reality of markets, is they humble people, including myself. Like, I didn't expect it to sell off so aggressively. But when it happens, you have to just stay calm, stay cool and collected, and do your thing. Love to see your opinion on platinum. The thing is with metals, silver, copper, this is all looking like, to me, is it XPT? Yeah, platinum. All of these things look sketchy to me because the global economy is seeing some slowdown. And if Trump becomes president, whether you like him or dislike him, in 2018, we have a case example of what Trump's trade war looked like with China. And it was not particularly pretty, right? Escalating tariffs and trade deficits and imports and exports. It is disrupting the supply chain, just like COVID did, right? People don't like that and the market gets freaked out. I'm not saying that's right or wrong, because at the same time, when Donald Trump took office the first time around, the market pumped higher for like the first year. Like, it was just a smooth as butter uptrend for the NASDAQ, for the S&P when Trump took office. That being said, in 2018, we have to be fair. Trump also caused a lot of drama, and the markets hate uncertainties. And Trump is a man full of uncertainties, right? Whether you like him or not, I don't think any of us would disagree that Trump he's a strongly opinionated man, whether you like it or not, like his opinions or not. The point is, strong opinions and uncertainties for market investors makes people a little bit nervous, but he's also pretty pro-business. So I don't know, I think at the end of the day, it's about the Fed. The Fed is more important, and where this economy is at is more important than personally, I think, than who becomes the president. This market, everyone likes to think like, but if you know markets, if you know truly how money works, it is the Fed that makes or breaks market sell-offs and rips, not the president. The president has a lot of power. Don't get me wrong. He makes up all the, he has a ton of administrative power, he or she. But the Fed ultimately is the treasurer, right? The in charge of the money, and money is what the markets are all about. Is there going to be printing of money to stimulate stocks as they fall or not? That's the question. And the president doesn't make that decision. So we'll see. Make it stop. Oh my God, I can't look. I don't know if you're playing around or if you genuinely are having a terrible day in the markets, but please understand, if you're learning a hard lesson right now in the markets, you are not alone. Many people are going to learn lessons during times like this, where you have, these are not, if you're somebody who has a stock portfolio, for example, it's not going to be a fun day to look at your stock portfolio, right? I gotta say, I'm gonna brag for just a second, because I've not been able to brag in this account at all, and I don't talk about this account because it's so boring. I have a really, really boring. My wife and I have a really boring Robinhood account where we are just long like dividend companies and utility companies and just the most boring, stable businesses, because we're saving for a house. And the point I bring that up is like we're like in like XLU, which is like utilities, which are doing well today. We're in Staples, XLP, which I believe is doing really well today. I mean, that account is probably killing it today. We're also long bonds in that account. So my boring stable stocks portfolio, it's not even individual stocks. It's all ETFs. It is the most boring portfolio you guys ever saw. But I bring that up because this is just a reminder that sometimes the hype trade is not always the place to be. Like sometimes just not losing your butt is the ultimate play. And I'm saying that from a perspective in my trading account, I've taken on a lot of water. So I've taken a lot of, taken several losses on this pullback here, but still keeping the losses under control. This is, the last year or two, it's been silly to be anything except a buy and hold investor. But when you get real market sell-offs, buy and hold investors do not look so pretty, right? During this time, if you bought and held, it took you like 600 days to get back to break even. You win by not losing. That is so true. Like it is more important in days like this for me personally, because I'm generally more bullish on equities, to try and find ways to stop the bleeding, not necessarily cash out big. I don't love shorting the markets. So days like this are usually red days for me, but it's more about, can I keep it like a light pink, not a dark red, if you know what I'm saying? Opinions on the Russell. It's currently a buy on the Edge Finder. Let's see. We got a bullish reading. Yeah, we do have a bullish reading on the Russell. I think one thing you could argue for why, in fact, this is part of the reason why I went long the Dow Jones today. Jason, check this out. I like the trade here because now that we're seeing the economy like pretty seriously slow down, we see unemployment rising, we see jobs data cooling down. Meanwhile, you also got PMIs showing some weakness. We have an economy that looks like it's slowing, not crashing, not recession. I'm not saying that. Maybe that's on the next, maybe that's next up for the market show. I don't know. But regardless, right now we're looking at, okay, economy's cooling, probably going to see rate cuts to combat that. If it keeps accelerating slowing, we might even see something. We're probably not going to see July, which the July meeting is in a couple of days. Probably not going to see July, but we might see possibly a 50 basis point cut in September. Maybe not 25. Maybe we go 50. I don't know. We'll have to see what happens with the economy. But why is this unevenly weighted for the NASDAQ compared to the Russell and the Dow Jones, which I am currently long? Because these companies are very rate sensitive, and rates are falling off a cliff today, which is, by the way, it's very good for my TLT trade, which I'm still in. I've hung on to this thing. It's done nothing for so long. So it's good for the TLT trade, but I've been sitting in this thing passively for a minute now. But rates coming down are good for the Russell, which is rate sensitive companies, right? These are smaller companies that need to borrow money. If borrowing costs are coming down, that's good for them. For the Dow, you know what also is good about the Dow? The Dow's got a bunch of dividend stocks in it. And dividend stocks are going to like rates coming down. Because remember, if rates are coming down, the people who want to collect yield, a lot of older investors, people who are maybe closer to retirement, they might be saying, okay, I want to collect a yield. So maybe I'll go into some Dow stocks, since the Dow will have dividends available when yields are falling. So bonds, people might not go into bonds as much. They might say, well, for the buy and hold yield investors, maybe that Dow Jones is going to get a little bit of a bid. Maybe dividend and value stocks look a little bit more attractive. So do I still like tech? I do still like tech, but the market's telling me I'm wrong. We're down 1.73%. I'm no longer in the NASDAQ. I stopped out. I'm feeling very grateful that I stopped out when I did, because my goodness, it's just been a bloodbath since then. So I lost money on the NASDAQ. No hiding from that. I was wrong in the NASDAQ entry. Looked good initially, bounced, dropped off the face of the earth, stopped out, kept going. And now I'm in the Dow, and I'm in the Dow, and I'm thinking, okay, we might see some cool down in the economy, like real cool down is finally coming in. And people might say in that situation, all right, maybe we go into, if yields are falling dramatically, dividend stocks are going to look as an opportunity cost a little bit more attractive. That's my opinion on this. If I'm wrong, I will stop out again. I'm holding loosely to strong opinions. That's been the theme recently, holding loosely to strong opinions in this market. That is the name of the game for me. The VIX is up 6% today. If this market tells me I'm wrong, I'm out, right? I'm not sticking around holding the bag. I'm not a buy and hold investor. I am a trader, and trading means admitting when you're wrong quickly, and trying to make it work when it's right. So that's what we're going to do. Just a heads up, I mentioned this earlier. If you guys want to get access to the Edge Finder, we're doing a 55% off discount for people watching the stream right now. Get yourself a copy. I'm telling you, it is the lowest. You want to talk about discounts in the market right now? This is the best one on the possible list of discounts. You got 55% off. Do you guys know what a 55% discount looks like? Hold on. Let me show you what a discount of 55% looks like. Let's see. Is this 55%? This is a visual representation. Wow, that actually worked out perfectly. This is a visual representation of a 55% discount like we're seeing on Tesla. But Tesla might not be a great buy here, but I can tell you with very strong probabilities that a 55% discount on the Edge Finder is a wonderful buy the dip opportunity. It is a low cost right now. It is our best price of the year. Despite my jokes and my silliness, it is genuinely a really great tool that we put a lot of effort in. We're constantly improving it. By buying a copy, you pay one time. It is not a recurring fee, and you get access to all of our data and ideas throughout. All of our updates and features come to you for free. So it's a great investment if you're looking to get some more market data. Again, this is your chance. Probably the best pullback discount available on the screens right now. So check it out. We'll drop the link here in the chat. With this link, when you click that, you can speak directly to a member of our team and get access to the Edge Finder 55% off. Don't miss it. Real quick, we're going to take a break, and then I'm going to toss the show over to our next host, Chris Pulver, to take a look at markets, take a look at charts, and I am sure he's got a lot of opinions here today with everything selling off. Maybe he'll be joined by Frank shortly after to take on this craziness as we get closer into earnings season. Dow's the only thing hanging in there. Russell's hanging in there. I know Chris might be having a decent day. I don't know. He's probably having a better day than me, tell you that much. Anyways, stay tuned. We'll be right back with Chris just after this. Man, Frank, we finally made it down to the beach this year. What do you think?
I think this is a really great setup.
No, Frank, we're at the beach. We came all the way down here. What are you doing on your phone?
But check this out. It's a really great setup on gold right here.
Our Edge Finder summer sale is now live. Get 50% off all of our tools like Commitment of Traders data, economic data, and our top setups algorithm for 50+% off using the link being dropped in the chat right now or the description down below. Don't miss it. This is our biggest sale of the entire year.
Hey everybody, happy Thursday. This market is very interesting to say the least. I just had a couple of trades close up for profit, which I'm super happy with. One of those was a short-term trade on the SPX. I did my little daily situation. We had 54. So when the market opened right here around 54.25, I went ahead and sold my call and I sold my put. I collected $3.80 credit. And it closed out for a quick $3.20 debit. So I took my plus 60 cents. Very mechanical. Take the trade, grab a 15% take profit. Works out pretty nicely. I'm putting that in my tracker right now. So that's a 7:25 expiration. So 0 DTE. I sent it around 54.25. And let me go into my platform and see what the legs were. So on the SPX trade. I know the numbers might be small, but bear with me. We can see my screen. Yep. Okay. So there, if you can see this over here, this is my 380. There's my 320. So there's my difference in the trade. And the nice thing is now that trade actually would be upside down a little bit because we've had a slight directional push in the first, it's been about 45 minutes since the open, but all I needed was that quick theta decay for the first like 15, 20 minutes of trading this morning. So as it stands right now, nice little win. I'll take it. And also the one that makes me really happy this morning is a win on NVIDIA. I'll tell you that in a second. So not a bad trade overall. Hanging in there. Also closed out some trades on the VIX. The VIX is up to 18 plus. I wasn't real pleased to see that my, intrinsic value on my call options were not paying out the way that they should. So what I was looking at is I'm at a 10.50 call on the VIX and it's trading at 18 and change. That should be a $7.50 call. Instead, it was trading for like 650, 640. That's where I closed it out today. It was just, $6 and change. So I did net around $1,300 on the VIX this morning per account here, which is pretty nice. And also took some profit on NVIDIA. So let me just get this tracked in. I sold the 5370. So this is, I'm just going to add this in, 5370 and then the 54.70. The credit was pretty solid there, $3.80, one of the better credits I've seen the last month or so. And then 3.20 was my take profit, hit that level, 60 cents. That was a nice little win. And that is a quick win, closed by 9:55 a.m. Eastern time. Okay. So if I take a look at this trade right now, it's trading for about 3.95. So I'd be upside down about 10 or 15 cents if I was still hanging on to it. I mean, it's still inside. This is what's nice about the trade. It's still inside my level. So, this would be my sell put, and up here is going to be my sell call. But you can see that the call side is now further stretched because price has been going lower. So when the put side is threatened, or the call side is threatened, it will change. But you can see here, like, there's a lot of fluctuation there for 10, 15, 20 cents. I mean, it was up to 3.95. Now it's under 3.50. So just like that, this trade is, back in profit now. And I'm sure as another maybe 15 to 30 minutes goes by, this will be back down towards 310, 305, grabbing some quick profit out of that trade. So overall, pretty decent day. Maybe it's noisy, maybe it's directional. Doesn't really matter. The trade's over. I'm happy with that. What I do on NVIDIA, let's talk about some stocks. Let's get some comments in here. Where are we at? What kind of trade was that? I call it the daily bread trade. That's what I call it, because I'm in it almost every day. And it's really something I take for maybe 60 minutes or so, 60 to 90 minutes. And usually it's a winner. I mean, over the last couple of months, I'm averaging around 90% on those trades for wins. And I managed to trade fairly early. So even by, if I'm not right, I'm not taking full losses. I'm usually taking, manageable losses of, I don't know, if I lose like $150 to $200, but on the average, I'm gaining like $60 to $70. But a 90+% win rate is pretty nice. And, it adds up. I mean, it's an extra little income play for the week, adds to my bottom line. And, yeah, so I like it. It can be. So, Juan, you sound like you're in a perfect position to, stay in touch with me and talk more about that, because I do have, all the information and mechanics on that trade. So, all right. Also, we got some crazy stuff going on today. The Japanese yen is all friggin' over the place. So I'm not sure how Nick has been doing on the trading battle this week. I've been all over the place trying to get in and out, trying to do some pairs trading on the yen crosses. They have literally been one winner, one loser all week. So Bitcoin, Ethereum, one winner, one loser. All the yen crosses, one winner, one loser. My net position on the battle for this week, I'm up about $527. I'm heading out of town today. I would put on some other trades, but I'm like, I don't know. Nick, you need to let me know how you're doing on the battle. If I'm down and I'm behind, then I'm going to try to throw in something and maybe do a Hail Mary to grab some profit. But I'm sitting up about $500. I was up $850 at the peak right after our first day of trading. And just the yens have been wild enough that I got beat up a little bit, where the losses were getting hit, and then I was just shy of those profits, and I'm kind of washing trades. And anyway, it's been a frustrating week for just having that high volatility. I mean, this is a wild and crazy day. Like, we dropped all the way back down, popped all the way back up. I was also doing the same thing in crypto, so it's been pretty wild. I did, however, if anybody's interested, I started to get myself into some of these Swiss crosses again. Now, I have been in the Swiss for a long time. This is an FX chart. So I opened this account with Tasty FX, and I'm going to use this primarily for robot trading. So I have, robots running with Oanda. I've got discretionary accounts and copy services running with Oanda. But Tasty FX, because I work so closely with them in my stock options and futures account, I'm doing Tasty FX as well. So Tasty Trade is my, stocks, options, ETFs, futures, even crypto broker, which they're great. They're easy to chat with. Plat Tech is great. Support's awesome. But anyway, I opened this account up with 20K, and I just thought, I like these Swiss pairs enough. I'm just going to take some more stabs at them. And so I'm in Aussie Swiss and New Zealand Swiss, and I'm also pending orders. Let me see here if I've got pending. Where is there it is. Pending on Euro Swiss and pending on Dollar Swiss. So I like some of these Swiss pairs enough. I'm just going to, kind of juice those profits. There's been some inefficiencies on the way down. So if you look at something like the Euro Swiss, I want to kind of buy it like now and go after that little pocket. but I'm just going to go ahead and throw one in down here instead. And then recently we had such an underperformance on the Aussie Swiss. So Aussie Swiss has dropped a decent amount. This one I have a trade in going right back to that pocket and right back to that pocket. So if these are profitable, this will be up about 100 pips. This will be up about 300 pips. I'll take my profit there. So 100, 300, so about 400 pips total, and grab a quick little kind of a pocket scalp, if you will, on the Aussie Swiss. And the New Zealand Swiss, same type of thing. This one is, sitting here near 30-year lows, and over the last 2 weeks has dropped pretty aggressively. I am just going to look at pulling back into some type of, stabilizing whenever it's ready. I can't force this trade, but whenever it's ready, trying to come back into a pocket, little efficiency trade. And I'm also going down to take maybe a 5,000 trade as well, and see that one get to an even bigger profit. So that 5,000 order right here, same profit target. So if I get that trade about 100 pips, that trade should be about 300 pips. So they're pretty similar looks, but each one's going to net me about 500 bucks. And so if I have another, 500 bucks on this account for the New Zealand Swiss, another 500 bucks on the Aussie Swiss, I get maybe a bigger trade position that I want to add to on the dollar Swiss, Euro Swiss. These are the type of trades that I like them enough. If I follow them closely enough and keep the trade size respectable, I add to my winning trades. I can take this, $20,000 account, probably turn this into like 30 grand, maybe more if I try to double this account. I've got another account that's doing the exact same thing. It is a $20,000 account. I'm trying to double it. It's not that hard. I just, there's a lot of entries. They're all super, super small. I'm trading a lot of nano lots on my Awanda accounts, but I'm building into those, kind of micro lots and mini lots and standard lots. So Nick says you're definitely beating me in the battle. Oh, okay. All right. Well, it's been a wild week, dude. It really has. And the nice thing that I have running here on my side is, I mean, look, I'm somehow carving out, 2,000 bucks on the day. The portfolio is still up. I'm not at all time highs. I've shrugged off about $50,000 in the last couple weeks. But I mean, P&L is not just dumping. I've got some hedges. I've got some positions. My broken wing butterflies will be profitable. So all this it's fine. It is what it is, right? I mean, the nice thing is we've talked about this for the last several weeks, that I couldn't just think that this narrow, highly concentrated Mag 7 market is going to be the one thing that keeps going up. There's going to have to be a broadening. There's going to have to be a mass strengthening in the market, or there's going to have to be a top. And what we're experiencing right now is there's a top, right? So how severe is the top? We're going to find out, because if we look at the SPX, from a percentage, actually, you know what? Now that we're talking about this, I was going to have this reserved for my trading room here in the next 45 minutes or so. But let's talk about it. So I don't know if I'm going to get filled on this, but I'm going to put in a position here on the Qs, because I do think there's a good opportunity to be long. Now, what I will do is I'm going to trade options. And you can, if you're a options trader, if you have options permissions, you can do credit spreads. This is an easy way to take the trade. I was looking at a 10 to 15%. Okay, 10 to 15% correction on the QQQ. We've had about an 8% correction from top to bottom right now. 9.56 correction. Now, that's right around that 10% level I've been talking about. So can I get, for a 450 credit spread, let me see what this does on the QQQ. So I have ratio spreads out there. Let me check my positions on my Qs right now. So Qs, I have a naked put out to 364, which is way out of the way. On my NQ, which is a futures trade, I have a it's considered, it's called a 111. That's a really popular name for the strategy. But basically what it is it's a bear put spread combined with a put, in order to it's kind of like a more advanced ratio spread. And the reason why is you can define the risk. You don't have to overpay for the long put. You can spread that, have it be a really nice hedge, and then also have your put. So year to date wise, P&L, let me see if it shows up here. So my NQ is down a little bit, but the 19.2 and the 19.1, that trade all by itself, going out to August. Okay, I mean, this trade cost me next to nothing, right? I mean, current price. So here's my 19.2, 19.1. I'm actually in profit. If we stay here, by the way, okay, if we stay here on the Qs and go down, that is a hedge of about, it's about a $5,000 hedge. Okay, it's about a $5,000 hedge in profit. Now, on top of that, I also have a put that's way, way, way down here out of the way. And that's another like couple $1,000. So it's a position for me that I can go, all right, price is right here. I will protect myself with a debit spread and then also collect some more income on a very low probability threatening position. So if price goes up, I still make money on the trade. I collected $10.50 or $9.50 credit. If price goes down, okay, go down a little bit, I still make some money. Go down through my bear put spread, I make some money. Go down enough. I mean, I don't really want to see my naked put get threatened, obviously. And I will have to manage that. But usually, if we're already discounting this at, okay, I'm safe until this market crashes like 10%, 15%, 20%. That's how you can construct this trade. So pretty cool. Anyway, let me take a look at the Qs. I'm going to put in a trade, and I don't know if this is going to get filled, but I'm going to do a 450 and see if this, I mean, the IV on the QQQ is going to be around 60 something right now. So here's a 66 IV rank. If I went out, let's say, realistically, I'm kind of interested in staggering. So I might go October, November, December on the Qs. October gets us into Q4, November gets us in the election. Realistically, I think going into November, December is probably better, just to stagger out a little bit of income. Now, I don't know if I'm going to get filled on the trade. I'm going to put them in as pending orders and see if the broker will fill me, right? So they may not get filled today. I want to get filled at the price levels I'm interested in. And so what I'm going to do is this. We're at 450. And if I have anybody in this session that is in my Equities on Demand trading room, we'll talk about this in the next 45 minutes or so. I am going to take this trade. We'll post it in the tracker, but I like this trade a lot. So 450, and then down here again around 420. Okay, so 450. If I go out to November 15th to a 450, that is going to be my put. Okay, so right now for a $5 spread, I can collect $1.60. Now that's about a third of the width, which is okay, but I'm not really happy with that trade. If I have $1.60 out of a $5 spread, I'm collecting about 1/3 the width. Now, from a tasty trade philosophy, that's pretty good. For me personally, if we're going to drop a little bit farther, I think we can get $2 to $2.50. So what I'm going to do is put in a trade here for about $2 and fudge it. I'll just go 250. I'll just try to take essentially an at the money. So let me check one thing. If I did an at the money, we're at 460 right now. An at the money is trading for $1.95. Well, that just shows me I probably can't get 250 on the trade. So let's try $2. I'll do a 450 by 445 for $2, and I will take 2 contracts. So it's not going to take right now. It's going to be pending. But if price is going to threaten this low or go a little bit lower, I should be able to get filled at $2. Now, for me, time is on my side. So if I take the trade here at the 450 by 445, if we are up higher than that into November, that's going to be full credit on the trade. Okay. If I want to take a profit target on that, I can go after like a 50% take profit or better. Usually when I'm doing credit spreads, I typically manage 0. I don't manage it at all and let it go to expiration, or I try to take profit when it's good enough around 80+%. So if my credit is, $2 and I'm at, 80% of that move, what would that be? So what's my 80% move? Should be so $2. So I take $1.60 out of it. So if I see a $2 credit turn into a 40-cent debit, I can take that $1.60, move on, be more capital efficient, and deploy it elsewhere. Okay, but I like the trade. I'm gonna see if I get filled. So I'd like to get filled at 250, but what I'm looking at right now is at the money. The broker's only going to fill about $2 right now at the money, and so I think I'm going to try to take the 250 trade or the $2 trade. So $2, 2 contracts. Let me put this in for all of my accounts here. So that'll be pending. That's pending. All right. So let's work that order now. So similar. Delete all my scribbles. Okay. Next account. Let's go. There we are. Pending. Pending. Okay. 9151. And 8051. Okay. So all pending there at $2. Now that's trade one. So I'm going to put in a 450 by 445. Okay. And then I'm going to do one more trade, and that's pending. I'm going to do one more trade down here at these April lows, the 416. So I'll do a 420 and do a same trade. So November 420 by 415, and do the same thing here for $2. $2 for 2 contracts, and do the exact same thing. So there. This one, yeah, I mean, whatever. It's a half of one, it's like a 0.25% risk. But I like the trade, so I'll put the same thing here. All right, so net credit $2, max profit 400, max loss 600. Pretty black and white trade, and send. So similar 9732. There we go. Okay. Just getting all these orders placed. 9151. And here. And here. Okay. All right. Good. All right. So those are in. Now I'm going to go out to December and do the same thing. Now let me get some questions. Expecting on gold. Gold's totally choppy today. Better wait for a target. Okay. Let's do this. Let's go to December's expiration now. I'm going to do the same thing on the Qs. Now I'll go out to the end of the year, December 31st. Yeah. Same trades. So the 450. Now it's interesting. December 31st, I can do the 450 by 449, and I'll take the same leg on the trade. So is this one at 450 by 449? I think what I'll do on this one is by December, where are we? I mean, I think we're still going to be higher. I think that the bull market is still very much intact. I mean, if you take a look at my chart on the Qs, what I see is we have just been going up, very steeply, where, we break these aggressive trend lines, pull back to an outer, go up and, break an inner, find support. I mean, I don't know. I'm looking to find support. So this past resistance to me is a logical spot to get a bounce. In the short term, I could also just buy shares and, trade it that way. I could do a buy right if I'm trading options, but I trade a lot of options to preserve my buying power and have cash at the ready. I'm a little excited that there's been a 9.5% discount on the Qs. I think it was needed, and it also has accelerated more than what we had back in April. That April correction from top to bottom was around 8%, and this has been one of the worst sell-offs we've seen since I don't know. I read yesterday like one of the worst days since like October 2022, but for the Nasdaq, one of the worst days since like 2002 or something awful like that. So it's been a pretty nasty spill from Wednesday or from Tuesday to Wednesday. That was a pretty awful day. Just in a single day from close on Tuesday, open to push on Wednesday. I mean, that was a that was an 18, almost $19 move just from covering the distance. That was about a 3.5 or 3.75% sell off. So, Frank,
What's up, Chris?
man, what's up, dude? How are you?
Pretty good.
Good.
How's it going? How's the trading battle going?
Trading battle, I think, is going okay. I've given back a few profits. I was up to like $10,800. Had a couple of Japanese yen pairs beat me up a little bit, so I'm at 10.5 right now. I might be throwing it in for today. I'm heading out here in a couple hours to fly to California, so that might be my final effort on the trading battle is pulling out about $530 for charity. So
Cool.
that's enough. Goes to a good cause. You know, whether it's Nick wins, I wins, is all going to a good cause. But interesting week, man. I mean, it was. I didn't feel like having a single direction. I want to be on both sides of it, so I was just trying to manage those like bigger winners and losses. And sometimes it was just tough because price was right in the middle. Like I'm not hitting my stop loss, but I'm not hitting my take profit. They're both equally shitty, terrible. And so I just watched a couple of trades, and but I was trading a lot of yens this week, a lot of yens, and then Bitcoin, Ethereum a couple of times. So what is fine. I mean, $500 is $500, but I'll see. So, how's your week, man?
Yeah. It's been fine. It's working out a little bit better this week on the short side. On the short side of things.
Yeah.
I have that SPX call or the bear put spread on
SVIX?
Yeah.
Okay.
So I did it like I guess a few weeks back, and it hasn't really moved, and it kind of went against me for a little. But I bought a put at 50.5 and I sold a put at 40, and that was 338 for the cost of that trade.
Okay, so you had a 338 debit. What's your credit showing right now? That's a pretty good move, dude.
It's at 688.
Yeah, there you go. Dude, take that freaking profit, man. What are you waiting for? When's it expire?
August 30th.
Oh. I mean, you want more downside? You already got it trapped at 40, right?
Yeah.
I mean, dude, if that's my trade, Frank, I'm taking that profit ASAP.
I think that's what I need help with, is figuring out when to get out.
Now. So here's why, right? Like, I think that, so what are the legs again? You're at a 52 by 40?
50.5.
50.5. Okay. 50.5. Okay. So let's go 50.5 by 40. 338 debit, now showing for a 688 credit. Your max profit would be 1050 at expiration, which right now, for just considering the time, you said August 30th?
Right.
So right now it's like your max profit's 1050. You're up about 60% of that trade, and you could save yourself a month of time and take that profit, redeploy that capital. So for $6.88, which is out of a 1050 max, you're already at a 65% take profit within a week or two, right?
So the problem with SVIX is that their spreads are really bad. I just discovered that.
Which is probably why, I mean, and again, I was going to say, like, how liquid is this fill? Because if you can't get filled to the mid price, that's going to be tough. So I'm assuming that you're, well, let me look at it. So you're 50, let's go SVIX. I don't even have the instrument, bro. Well, that's unusual. Usually Tasty is a plethora of instruments, and I don't have it. So looks like that's all you, man. Crap.
Yeah.
All right. So give me the bid mid ask then, because I'm sure it's awful from what it sounds like.
It was 4, then 688, and then like 9 something.
Again, you're in the debit for 338. I would try to get filled at a 638 or a 650. Like, take it under the mid price, but if there's enough liquidity there, you can probably get filled under the mid. I don't want to take the bid price. That's a terrible fill. But if it's showing a mid at 6 and change, 688, try to take a 675, try to take a 665, 655, 650. That's still a really good win, dude. That's over $3. I mean, you're looking at a 100% gain on that position. That's pretty good.
Thanks. I also got a VIX vertical. So I did a bull call vertical in the VIX.
Okay.
Which Tasty should have, right?
They do have VIX. I closed out my VIX today. I'm happy that I did. I think I expressed it this week. I was really disappointed to see that my VIX trade was not paying me intrinsic and extrinsic value. Travel blog. Whose Discord are you looking for? You looking for A1 Trading? I think they'll post that here. If you're looking for my Discord, let me know. Just ask for mine. I'll post it before I leave today. Okay, so my VIX positions, I have 2 of them, and I've closed them all out. Let me verify that. Yes. So I'll summarize this. So I had a 1050 call, and it was just a long call. And then I had a $20 long call. So I didn't have a spread on this at all. And when I noticed, like this week, I mean, price has been up to 17, 17.50, $18. We're still at 18 and change right now. This is what frustrated me a little bit. So we're trading at 18.30 current price. That means that my 1050, okay, my 1050 call should, and this is like out to August, and one was out to October, one is out to August, but my 1050 call, and we're trading at 18.30, I should be seeing like $7.80 of actual value in that call option. I closed it out today for 635. It was up to as high as like 670, 660 this morning. The VIX kind of faded a little bit off those highs. So really sensitive, but I just looked at it like, well, if we're about to put in a near-term bottom with the Qs down nearly 10%, the S&P down, 5 or 6%, I just think that it's been a pretty good smash to the downside. VIX is a very quick instrument to revert. And so I've got some profit. I'm going to go ahead and take it. So what I did is I had a 635 credit, and it was originally a 450 debit. So there's my $1.85. I was in for 5 contracts, so I made about $1,000 there. And then in my $20 call, was out of the money, and it was really cheap. I only paid $1.66, and I closed it today for $2.31. So 65 cents, and that was on 600
That's really
contracts.
good. What
Yeah, so
did it expire, or does it expire in like a month or something?
it does. They were, so one of them was August 21st, and the other one is October 16th. So there, I mean, I thought, well, if I'm going to really hedge this market, I need to be out to like August, September. But if we're getting kind of the early bird sell-off, and I don't know, like, is it going to get worse? It could. Who knows? But I think that, the same thing that Nick and I talked about yesterday on the show. The one thing that saved this market back in April and May was large cap tech in the Mag 7. And I know that so far, like, Google's not been great, Tesla's been disappointing, Netflix has been okay, but price action has not been great. So if we still have Apple, we still have Microsoft, right? We still have Nvidia, which, by the way, is down, and I closed out Nvidia today, and I'm super pumped about that. I'll talk about that in a second. I didn't think Nvidia was going to be a profitable trade, and it turned out to give me $3, so I'm happy with that. But
Nice.
anyway, I thought if this is going to happen and we have kind of the same lineup of like, okay, earnings haven't been bad, but the market's taken everything really roughly. We've got, maybe it's the the sign of the consumer pulling back, and forward guidance is less. I saw the GDP print today was pretty interesting and bullish. So anyway, my point is, we've had a decent correction in July. Percentage wise, are we going to keep going? I mean, these are positive drift markets. And I know that everyone's like, oh, this is the bear market. Like, I don't think it's a bear market, dude. I think we still have the Fed going to cut rates. I know that typically that sometimes signals the top, but seasonality wise, during an election year and a strong first half of the year, I'm going on history, I'm going on probabilities. We tend to maintain that momentum. And so to me, this is a pullback. I, of course, want to see good stabilization here and not just see a falling knife. But if we stabilize and start to head back higher, sure. I mean, to me, Frank, this is a pullback area that if we pull back here, there's room to get back to the highs. My concern would be if we keep stumbling and we test these April lows, that to me is a way more ominous sign for a bigger sell-off. That makes sense? Like,
Yeah,
I'm not
I
really
think
bearish until we take out April lows. Otherwise, this is a pullback that needs to stabilize, and then we'll see how this market can justify getting back to highs again.
if you look at the NAS on the monthly chart,
Okay.
it's gonna have to close a good bit higher to look, not bearish anymore. Because you usually see a reversal or an inverted hammer pattern,
Yeah,
it's a sign of a potential reversal.
sure.
So if it doesn't do that, but even if it comes up and gives us like a pin bar, or what do you call it, a morning star, something like that.
Well, so you're
Um,
saying this, if the red candle, so if it's right now, let me just draw this out. So if we had this larger wick, a little bit of body, so what you're saying is if this, by the end of this month, if this pulls away and does something like this, something like that, if the body of the candle all of a sudden retreats and we have more
yeah,
bullishness to close out the month.
if we go back to break even, it won't look as bullish, but still that could still be a sign of reversal.
Yeah.
If it comes back up and
is higher than last month's open, because they're right next to each other right now.
Yep.
Both months opens. If we can get a close higher, I think that would sort of indicate that we got, I guess, more room to run. But if it closes like that, or either of those two patterns or forms, however you want to call it,
Uh-huh.
I just think that that could be a sign for a much larger move lower. And that doesn't necessarily mean August is going to be red. We could see some green in August, and then September comes around, and if we don't get back to the all-time highs again or break higher, then
Right.
it's not going to look very bullish in my opinion. So I think we could see maybe some sort of bounce here if we don't continue lower. And if it does, I'm not necessarily bullish on this either, because even with yields falling, the market's falling. Um, and we all are expecting at least one cut this year, yet it's not necessarily, you know, being a bullish catalyst right now.
Speaking of yields, 4.22 on the 10-year and 4.22 compared to 4.40. So we've squeezed out another, 5 or 10 basis points difference. So we're inside of like 0.2% now. I put a chart together. Here we go. I put a chart together this week. Oops, I want to just open this one up. So new chart, load layout, credit spreads, AAA to triple C. I will be watching to see if these spreads get really, really wide. So 5.84 on the DBAA, which is a BAA corporate bond yield, and then you compare that to the U.S. 10-year compared to the one of these is the AAA. Which one is this? This one is the triple C. I want to move this one lower. So we've got AAA, triple B, triple C, and there's certainly a widening, right? I mean, the one thing I'm looking at is if you scroll back here, look at this is a daily time frame. What I'm looking for is just in price, or just I guess tracking as these are percentages. So looking for this. Look at how in 2020 spiked up, spiked up, spiked up. Your 10-year was heading down before it sharpened like crazy. But I'm looking to see, how up and up and up and up do these get. Like when these get wider, that's where if the show this week with Boris and Nick on the trading battle, we talked about widening credit spreads. They're still relatively contained, but that's the biggest fear moving forward, is that every major crisis we've seen in the last 25 years, with the dot-com bubble as well as a great financial crisis and even COVID, they quickly went into like some type of liquidity and credit crisis, which from top down just spreads everywhere, and it's like a plague. And it is like a virus in the markets, where there's nothing good that comes from deep widening credit spreads with liquidity concerns, and that's one of the Fed's also mandates, is price stability. So anyway, I just thought this is something I want to watch. You hear a lot of people on the news talking about credit spreads. Well, we think of credit spreads like options trading. I trade a lot of credit spreads, but when they talk about credit spreads as far as high yield versus treasuries versus junk bonds, it's something like this. You got to watch and see, are these widening, and if so, that's usually a good indicator to point towards some rough patches ahead.
So
Also,
I have a question
yeah, go ahead.
about yields.
Okay.
If we see one cut this year,
Uh-huh.
what would the shorter term yields do? Like what would they tend to do in that situation? Would they move harder than, say, the 10 or 20-year bond yield?
No, because when you have interest rate changes, when you have ups in interest rates or downs in interest rates, the most affected bond yield is going to be the further out duration. So when the price sensitivity is going to be the farther out one. So your 10, your 20, or 30 years, those are going to be the most price sensitive to rate increases or rate cuts. So if rate cuts, look at the 10-year going down, look at the 20-year going down, and those going down, yields go up. The 3-month will probably stay pseudo steady, I think. But the 3-month, and we've talked about this a lot, like the 3-month versus the 10-year. Dude, the 10 years at 4.22, the 3-month is at 5.30. So the argument this year has been that the 10-year is going to have to get more aggressive and actually steepen before it goes back to normal, right? Because
Right.
the 3-month is probably not going to change, not that much. It's not that sensitive to interest rates like the longer term is. So that's one thing that's really crazy is we're like 0.9%. We're almost 1% inverted between the 3-month and the 10-year. That's crazy. And so that's been the concern, is that the 10-year is going to get steeper and steeper and steeper, get closer to 5%. And that does not bode well for equities. In fact, if you look at that 10-year, that 10-year was up to 5% when we actually, had all the pain in the market in 2023. That pullback we had from summer 2023 into October, November, that was all based on this. I mean, I'm not saying that's the perfect correlation, but we had that downward move in the market, and we had yields going up. And as soon as that 5% was hit, that was an interesting peak here on the 10-year. So
Yeah.
I don't think that the 10-year necessarily goes higher, but if we do, I mean, the 10-year above 5% is usually a problem, because that is, hey, look, it's not worth taking on the risk of being in equities and having the market tank the way that it could be tanking, but instead go more risk free. Park something for 10 years, grab a 5% yield, grab it risk free, and then of course fingers crossed that the U.S. government's good for it. Which some people would argue that it is or is not. Who knows?
Hmm.
But does that
Interesting.
answer the question as far as which one is affected the most?
Yeah. So I wasn't sure which time, or I guess the time range was more sensitive. So I didn't know if 3-month would move quicker or the 10-year.
Yeah,
But
longer time frame
yeah,
will move faster. It's
because
way
we've
more
had
sensitive to
that.
changes.
I think this is the longest in history we've seen the yield curve inverted.
I believe that's correct. Which is also why it's something that has to be on everybody's radar, because it's like an unknown. It's like, we've been inverted this long. Some have argued that it doesn't really matter. The inverted yield curve recession indicator is broken. I don't buy that for a second. That would be like saying that, there's no such thing as value in tech, and there's no such thing as large cap, small cap. It's like all these things that have been kind of tried and true in the market. Look, it might take longer. It might be a little bit more extreme, but these markets have a way of finding that correlation that's been pretty steady for 50, 60, 70 years. So I don't know what happens when we come out of that inverted yield curve, but I would imagine that it probably can't be great. If I'm going to put a probability on it, last time we did it in 2020, last time we did it in 2008, last time we did it 2000, none of those, to my knowledge, were good times, right? So I can't
Yeah.
imagine that coming out of it again is going to be like, oh my gosh, look at this, we totally went up a ton. I doubt it. I mean, we've had a good run. I think a lot of people didn't expect all-time highs through 2022, right? I mean, 2022 was ugly. Nobody expected all-time highs like we had in 2020 and 2021. So the market does irrational things, and all we can do is, manage accordingly, make sure we're never over risking, make sure we're diversified. That's all we can do. That's what we can control, and that's where your emotions are in check. It's like, do what you can control, just keep trading, and everything's fine. So yeah, but
Yeah.
I don't imagine a coming out of the inverted yield curve will be good. And on top of that, did you happen to read that Morningstar article that I sent you and Nick this week?
I didn't read it.
You didn't read it. Are you not a reader?
I was
I'm
busy
kidding.
yesterday. I'll
Oh,
read it
busy.
today.
Okay, sure. Well, how about I just show it? Let's talk about it. So really quickly, we can just gloss over this. I just thought there's some really good takeaways, right? This was in June of 2024, but just talking about top indicators of recession, things like this are happening. Rising inflation, well, that's kind of squashed now, so that's not necessarily happening. Stock market declines, that is happening. Credit spreads, this is why we're watching them. Inverted yield curve, this is why we're watching it. Decrease in GDP, we've had stagnant GDP, but today was slightly better, so that's like a mix. High unemployment, we are creeping up. 0.5, 0.6, 0.7% unemployment increase. So that's happening. Business spending scaling back, right? If businesses are scaling back or trying to go more AI, more automation, cut back. You know, if it's declined, usually that's not a good thing. Price of gold's up. Okay, new housing starts, home prices, they're down. So a lot of these things here are typical indicators of recession, and we're checking a lot of these boxes. So food for thought. Where do they point today? Market expansion, we're expecting a slowdown. Interest rate volatility, it's been all over the place. Likely the overall rates will come down slightly. That restrictive nature will come down a little bit. Inverted yield curve, crazy, right? There have been no signs of recession since we inverted in 2022, but as we've seen in the past, coming out of that inversion, this is average spread of 1%. So this is where we need to watch. There's your inversion, is that black line. So when we were down here, okay, and did we have a crisis in the 70s? Yeah, that was your inflation crisis, right? 87 crash, or just after the 87 crash, not great. 2000, we know what happened. 2008, we know what happened. And now, question mark.
Well, this is the 2-year and the 10-year.
This is the 2 and the 10-year, but it's so it doesn't matter. Like the common inverted yield curve barometer has been the 10 and the 2. But the 3-month and the 10, the reason I like the 3-month and the 10-year is because that's been undefeated with calling recessions. When those have been inverted, we have a recession. So I don't know. I mean, if it started in 2022 and here it is 2024, 3-month and 10-year inverted, 10-year and 2-year inverted, what happens when we come out of it? I can't imagine it's going to be great. So
I don't think
to
so
that
either.
point, I almost wonder if this thing stays inverted longer. If this market's going to have more upside, I would imagine that we stay inverted longer. And I don't know how that's necessarily possible, but I do know that the Fed rate is coming down. And so if the Fed rate's coming down, that will bring the 10-year yield down, which will bring 10-year yield or 10-year bonds up. That'll bring the 20-year down, which will bring yields or bonds up. And so I don't know, because the way that we're doing these auctions every 2 to 4 weeks for treasuries, I mean, maybe the 3-month is going to stay, but the Fed's rate overall is cutting. And I mean, dude, I'm not in the Fed, right? Like I'm not this master economist, and I don't pretend to know, but I just have a hunch that this can't end well, or this can't be like this forever. So at some point, I think there's going to be, there's going to be a reality check, more so than what we saw in 2022, and maybe not something that could be saved by the Mag 7 or something that could be saved by the Fed and a backstop. And
So
that's
are you
ultimately
bullish or bearish? Because you talk about markets trending upwards, or at least earlier on, and then you say that we're in for something that's worse than 2022. So where are you trying to go here?
So I would
the
say
market?
that for 2024, we have fiscal spending that will continue. We have an election that, for better for worse, I think fiscal spending will still stay consistent. Whether it's policies going towards social reform or policies going towards fiscal reform, or like corporate tax breaks and things like that. I mean, whatever. We'll put a question mark around the election because who's going to win? Who knows? What else? We've got the Fed cutting rates. Okay, we have earnings. Are they good enough? Right? I mean, we're not sitting at like 28, 29 multiples on the price to sales ratios. We're not sitting at crazy, ridiculous, like crisis multiples like we had in the past. We're sitting at rich valuations. We're sitting at, 24, 25. But like 28, 29, 30, those have been the extremes. So if earnings are good enough, what's the forward guidance? I mean, right now we're noticing that a lot of the talk is about the consumer cutting back. Okay, well, consumer cutting back equals smarter consumer, right? I mean, what consumer right now is going to be like carrying $20,000 of credit card debt? That is ridiculous and the worst possible debt you can carry. Now, if it's a consumer that has student loan debt, if it's a consumer that has a mortgage, I mean, most people right now are sitting in this insulated household equity because for the last 4 or 5 years, prices have gone up 25, 50 to 100% in value. So on paper, the consumer is actually okay. But what the consumer is doing is just stop spending, scale back. It's fine. Stop buying crap, go on a vacation, sure, but stop buying stuff. So that's what we're scaling back on. People are upset about the grocery store, whatever. But point is, consumer is okay. They're okay. It doesn't feel like it. I know it's painful out there. I know stuff is way more expensive than what they make it seem like. 3% inflation. It's, the eggs and milk and stuff at the grocery store and gas. Yeah, I get it. It's like 20% more. Okay.
Yeah.
But if we're cutting back, it's like this is where the slowdown happens. Our GDP is 70% consumer based, right? So if the consumer scales back, that means a likely slowdown for the US as far as consumption. But can the US still produce growth elsewhere? Maybe in tech, maybe in margins. As yields come down, businesses are able to refinance, restructure. The housing market, corporate, or I should say like institutional housing or corporate housing as well as residential, cuts make a big difference, man. Make all the difference in the world. And on this chart, this article here, the one thing that I really took away from this is look at our GDP. So inflation rate coming down, low 2s or sub 2%, and then real GDP growth just above that. Projecting that we have a 30-year mortgage by the end of 2025 falling into like the 5% range. And then by the time we get into like 26 and 27, we're at 4%. Okay, I mean, if you're willing to wait for a little bit, but the problem is you wait for 4 years to get rates down to 4%, your house prices are probably going to stay where they are now or go slightly higher. I would assume prices are going to stay stable or go higher depending on the market. But 30-year mortgage is slightly higher than the 10-year treasury, which is anticipated to be right around 3%. Okay, federal funds rate will be slightly below that, around 2.5% or 2%. So the direction of all this is my point here. The direction of all this is things are coming down. This is why I keep saying that a cut by the Fed is a consumer-friendly cut. Okay, I don't know if jobs market's going to change much. I mean, we've had a softening. Do rate cuts help jobs? I don't know. Maybe.
I mean, it's a nice
Probably not.
gesture. Like
What's
a
that?
25-point cut, basis point cut is a nice gesture, but is that even enough?
No, it's definitely not enough. But it's the gesture is this is what is coming, right? And this is what the market does all the time. The market is forward thinking. So for a gesture of 25 basis points, that means another 100 basis points is coming. The market gets a little bit more amped up and excited about that. Now, to this point, we've seen the market amped up all year, right? Fed's going to cut 7 times. Market rips like crazy. One of the craziest Q4s we've ever seen since ever. And we still have maintained that momentum. That's what's crazy to me is like with 7 cuts, then to 6 cuts, then to 0 cuts, then to 1 cut, then to 2 cuts. I mean, this market's like, we don't care. Rate cuts are coming. Things are fine. And it goes, and it's got blinders on. So I think that's been the scary part is we're overstretching. We have this super, super narrow market. And right now, here's where I think this is my summary of today. We're getting a pullback right now. Okay. This is the chance for the market to stabilize as a whole and see if we can get a broader market recovery. Not a narrow-led Mag 7 rally, even though that's what happened in April and May. But could it be led by Mag 7? Sure. Could it be led by overall consensus being positive for earnings? Sure. But to me, after this pullback that we're seeing right now on these indexes, S&P and Qs, okay, we're actually green on the day today, which is kind of nice. It's a lot of volatility today, man. 5-4. I'm looking at the SPY. It was down $2.50 and then ripped up about $5. That's a lot. Anyway, this pullback, I think, gives the market a chance to say, okay, pullback happened, pullback acknowledged. Now the SPYs and the Qs, if they're going to stabilize, can they go up along with the Dow and the Russell? Because what's been the missing ingredient all year, Frank? Not everything's been moving together, dude.
The small caps.
Yeah, well, no, I mean, the Dow has not moved in conjunction with the SPY and the Qs. This year, it's been like this. SPYs and Qs. Okay, so we'll say SPY is here. SPY is there. Qs are there, right? Dow, little pop there. Russell, little pop there. It's not the same. And so as a healthy bull market, this is not normal, okay? But when you put it all together and you take this environment we're in right now, is this enough to say, okay, we shed a little bit here, we stabilize. If this is going to go up, does everything follow suit? Can we have a SPY Qs recovery here? And can we have the diamonds and the IWM small caps? Can we have them also go with it at the same time? And
Well,
so
the
maybe
Russell is very it's been lagging all year, but it's one of the only things up today. Dow is barely up,
I know.
but I can't. If the whole market's coming down, it's gonna be hard to go against the overall momentum.
Of
But
course.
I did sell a lot of my small caps, so
Okay.
we are just kind of sitting and waiting.
Yeah.
But yeah,
Okay.
we're over time again.
I'll fudge. All right. I was hoping we go for another few minutes. No, it's okay. Yeah. All I was going to say on that with we talk about this later. I'll just we'll talk more about ways to position. So quick, and I'll let is it James or Nick that comes on, or is it Nick Phillips who's coming on?
Yes.
Nick. Okay. If I put on a trade like this, bear put spread and a naked put, and I have a trap. That's one of my favorite trades where I collect credit, I've got a long trap, and then there's my risk. Because if we're here, we go down a decent amount, down even a lot, it actually gets me into a 10x profit, and then this is like a 95% probability of profit. I start with like extremely high probability trades, but it's something I have to manage, you know. And anyway, there's ways to trade like the down market. There's ways to hedge and still like, look, I could be wrong on the downside and I could be this perma bear, but it is stupid to be a perma bear and watch this market melt up against you and just still justify a bear market. It drives me crazy when I know people out there are bear, and they could be wrong for years and years and losing their shirt, and all of a sudden they get one 6-month window, 12-month window right, and they're like, "See, I told you." But did they make money for the 3 or 4 years that they were shouting that the sky's falling? So I just think trade what you see, use good risk management. There's so many strategies out there to make you money. So anyway, that's it.
Yeah.
That's my time.
You got your few minutes.
I got my few minutes.
We got to go.
All right. Thanks, Frank.
Yep.
All right.
Thank you. Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
What is going on, everybody? Happy Thursday. Happy to be here today. If you guys have any questions for me during my stream, I'll be on for about the next 20 to 30 minutes. Go ahead and feel free to drop them in the chat, and I will try to get to them. So this morning we had GDP, jobless claims, and PCE prices drop. And I want to take a look at what all of this how this all came out in my perspective of what it means for the markets. So advanced GDP came out pretty hot this morning compared to prior and expectations. Actually, I like this chart a little bit more. Boom. This is a little bit cleaner for me. So, 3 year. As far as GDP is concerned, coming out hot, it is still cooler relative to almost a year ago. So exactly a year ago, we're kind of flat, 2.8 compared to 2.1, but compared to Q3 of 2023, we are down significantly still from this 4.9 area, 3.4, 1.4, kind of just a little bit of a slight bump back up here. So we're seeing some growth in Q2 anyways. Now, pair that with something like the initial jobless claims, and we still have, even though this was cooler than expected, we are still up relative to, let's go, we'll go from January of this year. We're still pretty hot as far as jobless claims are concerned comparatively to the beginning of this year. Let's find where did January started. So January started 198,000 jobless claims, and now we're averaging 235, 243. We're hanging out 240s, 230s. So we're up pretty significantly from the beginning of this year on initial jobless claims. And if we check out continued claims, we're also up. Let's see, January. Boom. So 1.85 million, I believe, is what this is supposed to be. Yes, million. Okay, so I don't know why they list it like this on Trading Economics. K thousand, 186K thousand. It's like thousand. Just say million. So we're up on jobless claims, but growth is continuing up. So our labor market is not starting to, but over this year, this year it has started to slow. It has started to contract a bit. GDP is up as of Q2 of this year. Inflation has started to come down in the last month, not month, sorry, the last 3 months. So a little bit of softening in the economy with growth. This is sort of, I believe, the ideal scenario. Let me check one thing real quick. I don't have it pulled up on this computer. You know what? I think PCE prices might have messed us up for the Goldilocks. PCE prices. Yes, so PCE prices messed us up on a Goldilocks print. Yeah. It's the state of the US economy is interesting right now. My oh, too many tabs. Yeah. Every 2 or 3 weeks, somebody said too much tabs, my PC would have blown up. Every couple weeks I have to like close out my entire Chrome because I open tab after tab after tab after tab and then forget to go back and close them once I'm done. I just continue to open new tabs. But my outlook on something like the dollar, for instance, it's tough because we're getting some softening, overall softening in economic data. But we have this looming Trump trade based on the markets sort of starting to anticipate and expect a Trump victory in November. And with his proposed economic policies, uh, potentially bringing about an inflationary environment in the economy. He wants to do rate cuts. That's one of his, you know, big things. He wants to cut rates, wants to make it easier for, consumers to access capital. But on the flip side of that, he wants to impose tariffs that could theoretically hurt us price wise here in the United States and see inflation continue to rise like it has over the last few years. I know inflation is down on the year, but if you back out, let's go CPI real quick. Back out farther than a year. We'll go core inflation year over year. So this time to last year, it was 3.3% up. I wish I could see what would be core consumer prices. So prices in the last 5 years have just continued to absolutely, I mean, it's ridiculous. It's absolutely insane. On the consumer side of things, I think people get confused when they hear something like inflation is at core inflation is at 3.3 or inflation is at 3.3%. That's from this time last year. I would be interested if anybody knows where I can find this information, how I can find a chart for this. I would like to compare this year's numbers to the year before last and the year before that. So not where is inflation at now relative to last year, but where is inflation at now relative to 2 years ago, to 3 years ago, to 5 years ago. I believe that we are still incredibly hot inflation wise if you compare it to 2 years ago. All that being said, the good thing about this dollar conundrum from my point of view is the way that I trade is based off of red folder economic data. So typically, what I've been looking for is reasons to sell the dollar. I've been looking for data to come out to give me the opportunity to get in bearish on the dollar, which means when we have hotter prints that would push the dollar up, I have less conviction to trade those prints. Simply because my overall bias is the market wants to see reasons for rate cuts this year. If we can get those, cool. I anticipate the market to start pricing that in. If we don't get those, I don't have as much conviction to think that the market is going to price in rate hikes. So to push the dollar up significantly, I'm not as convinced on hot data, hot US data. Now, with the market being where it's at right now, with the doxy bias sort of being neutralized, right? We have softening economic data. We have the potential Trump victory pushing US up. We've essentially neutralized any bias either way for the dollar, theoretically. So for me, I don't mind taking a trade on dollar pairs if we get bullish data or if we get bearish data, hawkish or dovish data, data that points towards dollar strength or data that points towards dollar weakness. That is the only benefit for me right now of sort of this neutralized situation that I find myself in when it comes to the dollar. Now, let's change gears here and look at something in Q. NQ rallying a bit, I believe, this morning, maybe off the PCE prices. This drop makes much more sense to me than this recovered rally that we're seeing in the last hour and 10 minutes. Now, I will say I wouldn't expect this to last. My expectation for something like the NASDAQ right now, here's why I wouldn't expect it to last. I'll switch gears over here, go to the 10-minute chart here real quick. Since July 11th, when we got CPI data, every time the NQ has attempted to rally, it's failed. Attempted to rally, 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 failed. Every attempted rally has failed since the CPI print. So, what does this mean for us? This to me indicates a bit of a bearish market has taken hold of at least Nasdaq. I'd have to go look at S&P 500 to confirm that it's also on happening over there. I pay attention more to the Nasdaq than I do the SPX. But this has just been a massive move to the downside. Yesterday, I believe it was, Nasdaq saw its biggest losing day since December of 2022 or October of 2022. So almost 2 years, a year and a half worth of price action. Yesterday, we saw the biggest red day out of Nasdaq and the S&P since 2022. That is pretty massive. Now, the other day when I was on live on Tuesday, I believe, I was saying that if we don't push up from this level, my expectation was if we fail to push up from this level, we would see price come back into this area and then beyond this, start targeting some of these other key levels. Now we've seen the NASDAQ tap into this 1900 area, and I believe this is a huge psychological level. Not 1900, 19,000. This has got to be a huge psychological level. It's around $1,000 level. I'm not surprised actually to see this reaction now that I'm looking at it from a technical basis. This is where the question comes in. Are Are investors going to be buying the dip right here? Or are they going to be waiting for the dip to dip further back down into this 17 to 1800 range? For me personally, I'm not looking to get involved in the NQ long until we see a significant shift in the daily. Now, a couple things that I would anticipate happening. One, if the bulls are going to take back control of the market from this point on, I think it would be a nasty move back to the upside. I would not anticipate a slow burn back to the upside from here. I would expect a slow burn to the upside from these levels. And here's why. If we're thinking price action wise, standard, just market reactions, I could see a continuation into this area. Make a lot of retail traders think that we're going to come in and do a bit of an inside retest, create this head and shoulders pattern, fall to the downside, and then slowly eat away their positions back to the upside. I could see that happening. Not taking fundamentals into account at all. Vice versa, technically, I can see yesterday being this entire leg acting as a bit of a bear trap, right? So you heard me say at the beginning of talking about NQ, I believe we're in bearish structure now. So there's a lot of retail that probably is thinking the same thing. We're in bearish structure now. Sell, 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 sell. Boom. And the market gets bought back up and all the sellers are being taken out of the market. For me personally, I would not be trading this up from here. I'm not interested in trading it up from here. I would just be looking for reasons to continue to sell off the NQ. So that's going to look like tomorrow with consumer spending. Cooler consumer spending. I'm not really sure how consumer spending is going to tie into NQ tomorrow, to be honest. Let's move on because I don't have a real good footing on NQ at this point in time. My main bias coming into this was if we fail to push up from this support level, we would tap back down into this area. Now we're in this area. It's anybody's guess as to how price is going to react from this level. So, all right, let's see. Gold 2350. Somebody said gold 2350, good TP. I mean, you're right there. I'm assuming you're scalping this. Not really sure where you may have gotten in. Yeah, for sure. So we had good reason this morning. If you're just considering the GDP, the advanced GDP numbers, which I think was the most impactful when it came to as soon as the data came out, market reactions. We saw dollar pop to the upside, gold obviously pop to the downside. Let's check it out on a 1 minute basis. So this is where, right here is where GDP data dropped. And for the next hour afterwards, we saw bullish price action out of the dollar. My personal opinion on this is that the Doxy strength and the gold weakness, it's tough it's tough because of the macro environment right now, because of the softening economic data, but the proposed situation from Trump. Fundamentally, it's hard to identify a bias for me personally. But on a technical only basis, not a good entry point for me. Not somewhere I'd be interested in getting in for gold. But I could see bearish downside to these lows, and then beyond that, it's sort of anybody's guess as far as, are we going to find support here? Are we going to rally back to the upside? What's going to happen fundamentally? Um, I wouldn't say I'm a short-term gold bear at this point. We have a bit of a channel here. Oh, so 2350 is not a bad target if you're scalping it down to to this area. You're sort of meeting um, you're meeting some support from within this channel, and you're meeting, depending on how long it takes to get there, sort of meeting the this channel, the bottom trend line of the channel. Like I said, I'm not a gold bear at this point in the game. I think we still have a lot of room to the upside for gold. And if I think from a risk sentiment situation, I see more gold upside. The uncertainty that, thanks, where can I follow you? First time here, respect from the Netherlands. At official Nick Phillips on Instagram, it's Nick Phillips on Twitter or X, at official Nick Phillips on YouTube, but just official Nick Phillips. You can find me. If you hit my Instagram up, you'll find me there. But yeah, long term, I would say I'm still a gold bear, or sorry, still a gold bull. And part of my reasoning is the uncertainty. A big part of my reasoning being the uncertainty with the election coming up in the U.S. There's a palpable tension here in the air where it feels like at any moment something new and crazy could happen in this election cycle. We have an attempted assassination of the president, what, 2 weeks ago? The former president 2 weeks ago. We have the current sitting president backing out a very unpopular VP, now being the nominee for the Democratic Party. It's anybody's ball game right now. Election cycle, trading through this election cycle is very yeah, Trump winning for sure. I look, political opinions aside, I'm certainly not somebody who, like, I don't go crazy for politicians. Um I think it looks, when it was Trump and Joe Biden following the debate and the assassination attempt, it was a Trump shutout, in my opinion. And looking at some polls, his victory seemed almost assured. Now with uh, Vice President Harris having her hat in the ring, I I don't want to say she can't beat him, but she's a stronger opponent than Joe. Yes, I think it's a tougher fight than Joe, but I still don't know if it's enough for her to win. Um, so with that being said, an inflationary scenario in the US economy coming from a Trump victory, gold is supposed to be a hedge against inflation expectations. There are some charts that show whether or not that, always is the case. But if that's the case, a Trump victory could see us having gold and US dollar upside at the same time. So yeah, it's a very, very interesting time to be trying to formulate biases. And I guess I would say I am not. I guess I would say I am data dependent when it comes to pretty much everything that I look at, which is currencies. I look at gold. I watch gold. I don't necessarily trade it a lot. Um, Mainly currencies and a little bit of the equities. So when it comes to the dollar itself, I'm entirely data dependent and just taking my viewpoint of the dollar, economic data by economic data, headline by headline. Right now, it this is an interesting fundamental experience because it feels like there's no real way to grip a bias, whereas over the last, let's see. I started implementing fundamentals into my trading last summer. So in the last year, I feel like I've always had a hand on the wheel as far as an overall bias when it comes to the dollar. But right now I don't have a hand on the wheel because it's not that I don't have a hand on the wheel. I guess my hand on the wheel is neutral. It's hard to create a bias either way. So it's a very interesting time for me fundamentally trying to carve out a bias here for the dollar. Um, what sites do I watch? That's a loaded question. I will say one of the biggest sources for me right now is Twitter. Twitter is a huge resource for fundamentals. Um, Once you can find some people on here, market analysts that have, I mean, they go like they're similar to Chris Pulver. Like they go into some of these charts and discern signals from the most obscure pieces of economic data to where, like, for me it can be a little bit too in depth. I like to keep my trading simple. So when it comes to, like, I have two boxes of thought, right? Tradable, actionable information and information that sort of just is nice to know. It's how can I say this? Peripheral information. It's good to know, not really necessary for how I trade. But to answer your question, X is a good one. Financial Juice is a good one for headlines, and I like the way that for data, like I can input alerts here, and when if core PCE prices comes out higher than this, it's going to give me a buy button. If it comes out lower than this, it's going to give me a sell button. And then if all of these come out in one direction or the other, it does the work for me of having to try to remember what numbers I wanted to see in order to get involved in the market. So Financial Juice is a great one, and they also have these articles that they do, these daily prep articles, where you can go through and read through sentiment, et cetera, et cetera. And then Forex Live, again, another good resource for me. I like to read through some of these things and see what people are saying. But even them, let's see right here. They quoted Nick. I cannot say this guy's last name, Timoros. But they referenced his X post, his tweets, right? So even these guys that are writing up stories are getting their information from X. So, again, I don't like to take sides politically or anything like that and say like, oh, rah rah re like I'm for this person or that person. So I'm not gonna all that aside, X is proving to be a front runner when it comes to economic any kind of news. I found out about the Trump assassination attempt on X. I found out about Joe Biden dropping out of the race on X. I found out about Kamala Harris being the new nominee on X. I find a lot of my data on X. The thing is, you have to start to you have to look for this stuff. So, go to Trader Nick. go to Chris Pulver's page, go to start looking at Financial Juice's page, just look up like Forex macros, and you'll start to find all sorts of tweets and people, and you can go to my page and follow the people that I follow. Uh, Profile. So like 90% of these people are market analysts that, they post really good information. Another good resource is Substack. Shameless plug. This is my Substack, official Nick Phillips. But some of the people that I'm subscribed to on here, let's see, like Capital Flows. This dude has, again, some of these guys go into some of these charts that are absolutely insane. Have I marked up gold yet? No, but I can go back and touch on it again. I didn't mark it up per se. I gave like my overall bias for gold is I'm still a gold bull. I haven't switched my hat to gold bear yet, but that's on a longer term basis. On a short term basis, I would say I could see us tapping down into this area here, 2300 ish, lower 2300s, or right at 2300, I should say, as opposed to 23.5. But I don't, yeah, I'm not interested in getting involved in gold in this area, sort of in the middle of this range. Like we're almost smack dab in the middle of this thing. We'll take it to the top of the range. We're like kind of around 50%, 61%. So yeah, not interested in trading it in either direction out of this area. But yeah, Substack Capital Flows is great. It's a lot of reading. That's what fundamentals has boiled down to for me, is just reading stuff from Goldman Sachs, from JP Morgan, from market analysts, YouTubers talking about this stuff. There's a show called Macro Mondays, I believe, on Spotify, and then PIQ Suite, which I could be completely messing up that name. I like these guys a lot. They do a morning show. It's called the Morning Blast. Every day, it's about 15 minutes, and they cover the latest happening. Like it's a daily refresh of what's going on in the market fundamentally, globally. So definitely, I would say this is one of my favorite uh, analyst resources. Would be the PIQ Morning Blast. Oh yeah, I've never tried. Somebody said I never tried Twitter for info. I would give it a shot. So I'll say this: Twitter for info, or X, whatever you want to call it, it is great. And one of the best things about it is some of this, like this Explorer. It says beta. Your Explore page, like once you start to kind of build out the algorithm starts to see that all you care about is macroeconomics. It's going to publish some incredible stories for you. So we can click here: market expectations of Fed September rate, anticipating a reduction of 0.5%, so 50 basis points by September. The expectation is fueled by economic indicators. But see, then you don't just want to take this with, it says some investors anticipating a significant reduction of 50 basis points, right? Well, what is some investors? Quantify that for me. So how do I quantify that? I go to FedWatch and I go, okay, September, only about 14% of investors are pricing in 50 basis points in cuts. The rest of the market is only pricing in 25%. So, I mean, we're 100% priced in for cuts in September. There's 0% pricing in a pause. So our current levels is 5.25 to 5.5. and we are almost 94% priced in for a pause in July. In September, we are 100% priced in for a cut, with almost 86% of the pricing in being a 25 basis point cut, and the rest being a 50 basis point cut. Is that? Let me verify. Yes. Okay. Yeah. So you got to be a little careful and kind of verify some of this stuff. And then you can read through some of this. So Walter Bloomberg, I follow this guy. He does a lot of headlines. You can find headlines on Twitter really fast too. Who I wish this was a good time for headlines right now. Like I wish something was coming through because like PIQ does headlines. Let's go to X Pro real quick. If you sign up for X Pro, you can create like a tweet deck here, which if you hit me up on Instagram and you end up doing this, either hit me up on Instagram or Twitter and I'll share my tweet deck with you. I don't really know how to share it other than to do it individually. Capital Hungry is good. The only thing I'll say about Capital Hungry is they have a lot of very opinionated things that they print, which to me can be a little annoying. I'm very much like a data person. Give me the facts, give me the information. I could care less about people's opinions. The only time opinion really comes into play for me is when I'm thinking about like maybe risk sentiment. Then I want to gauge sort of what some of the analysts are feeling. But even then, that's, I guess, less so personal opinion and more so like the markets are starting to feel a little fearful, blah, blah, blah. So Financial Juice is a good one. Walter Bloomberg, First Squawk is on this list. Forex Live, New Squawk. I think that's really it. There's another one that's actually not on this list that has turned out to be really good. Let's just scroll through my following real quick. Let's go back to, what time is it? 11:42. I think I'm running past my time here. I'm going to try to. This is good. The Spectator Index. It's some of it's stuff that doesn't matter. Zero Hedge is a great resource for data. Oh, come on. Unusual Whales, another good resource. So yeah, definitely. I can't find the one that I was thinking about, and I know if I scroll back far enough to get to the 11:40, 9:40, it would have had to have been about 3 hours ago. If I scroll back to where GDP and PCE dropped, I know that they would be one of the first ones that dropped the data. But yeah, regardless, I don't know how to say this. Kobayashi, maybe Kobayashi. This is a great outlet as well, a great source of information. This, let's see, Open Source Intelligence Monitor. I like them for potential war escalation headlines. I tend to see stuff from them before I see something from pretty much any other news outlet. Now, if you've got the money, I'll be honest with you guys. If any of you guys that are watching this right now have about 20 to 30 grand a year that you can set aside, just getting a Reuters or a Bloomberg terminal, that's the name of the game. If you can get that, not that you don't need Twitter, but you kind of don't need Twitter. It would be kind of all inclusive. All the information that a lot of these guys that are posting on Twitter, they get a ton of their info from their Reuters and their Bloomberg terminals. But those things, from what I know, they cost anywhere from like 20 to 30 grand a year. So you're talking like 2-3 grand. Is that math right? Yeah, about $2,500 a month for a Reuters terminal, and I think that may be on the low end depending on the functionality. But if you guys have that, that would be, the number one. Michael Brown, he does. He's a co-host of the PIQ every day, or most days. But yeah, Twitter's great. I think that's it, guys. Like I said, neutral on the dollar, neutral on gold, data dependent, waiting for more data to hit the market. And my reasoning for it, I'll follow up with softening inflation data, little bit of some warmth coming, not warmth, but contracting job market. But we have the potential Trump trade pushing it up. So flatline on the dollar. And I think that is it. If you guys have any questions, feel free to reach out to me. I try to get back to everybody as soon as possible. Usually within like 24 hours, I can get back in touch with you. But other than that, from all of us here at A1, I hope you guys have a great rest of your trading day. See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.